We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. It's good to be back after my extended vacation. So hopefully you guys had a great time while CM was gone and out and about. But today we're going to be talking about the topics that you see in the title. Depending on the platform you're on, it's in the top or the bottom. And it's not going to guide exactly the order in which we're going to do it, but we're more or less going to be working along those grounds. So a lot of them are overlapping and related, and so that should provide easy transition. So I think let's begin with the first juicy one, and that's Jamie Dimon's warns us, or his warning, based off of the recent JP Morgan Chase earnings call. And of course, that comment is a little exaggerative. Because, of course, he didn't necessarily provide a definitive warning, more so just cautionary takes on what's propping up the economy. And he shared some of his thoughts there. So we'll go in order with if Dan and then Bacon, if you have any thoughts on that, and then I'll close off with my thoughts on it.
Bacon, you go first.
Oh, okay. He is the chosen one. Thus
Very good.
say Jamie Dimon.
Yes. I mean, if you guys haven't read his book, I do recommend it. But, oh, by the way, while we're all discussing this, please answer the poll. It is meant to sort of be a joke at the same time, but also serious. Let me know if you're panicking right now with everything that's going on. I have to be careful about probably how I say the event, but the event that recently occurred that may or may not cause certain stocks to sell off on Monday, along with other stocks rising. Oh, by the way, we are going to have a discussion. I'm going to try to time the discussion on the stock that we shorted when Andrew gets on. So I'll try my best to kind of be pushing that topic to the end. So stick through us to the end of the stream and you'll get to know all about that. But other than
It was
that,
very
we'll
good.
cover everything. Yes, it was very, very
I didn't really cover it in my channel because it's not. I'd wait till today. So it's Andrew's thing.
Yep.
Well, we have to have Andrew on. Okay, so Dan, if you want to go, or if I'll go and I'll share my thoughts.
I was just reading his note on it. So he talked about like it's like halfway through his letter, persistent inflationary pressures, which kind of coincided with the CPI data came out. Maybe was it the same day or like a day apart? So it's just kind of two things hit at the same time. He's writing about inflationary issues in his letter. CPI comes out, people freaking out. He talked about interesting remilitarization of the world, which I don't know if we're going that far. Like, are we going back to Cold War levels of militarization? That's a stretch. Restructuring global trade, capital needs of a new green economy, which is an interesting concern. Higher energy costs in the future. So he really like expands like globally, not just about JP Morgan's business. This is interesting. I mean, he's always kind of been like this. So
yeah, I was going to say he's always been a bit cautious, a bit bearish for the bank CEOs more often than not. And then you have Bank of America CEO. He's over there just saying like everything's fine. The world's fine, the economy's fine, etc. But they don't invest that way, which is something I like to point out. Bank of America typically goes a little bit more conservative on the credit risk profile of their loans, but they have one problem, which has been their problem recently that everyone's figured out, which is duration risk. So they have a lot of duration risk, but not so much on the credit risk side. And duration risk hasn't been a prominent issue that people pay attention to for the longest time until the liquidity crunch kind of fell into full swing. And then we also saw the banking crisis in 2023 with some of our banks actually failing. So all that to be said, I mean, yeah, he says all these things, but he doesn't, put his money where his mouth is. And it's funny that the CEO that's seemingly bearish also goes a little bit aggressive as well. Well executed by him and his team. Oh, what is this? Fabio didn't fed us all week. I get it. Thank you for the super chat.
how long? I mean, how many years have we always said like Jamie Dimon is your battlefield like CEO? This is his time to shine, and shine is when things are not going well, and he does this because he manages risk well running a bank. His concern would you say like his concern primarily is managing risk more than growing their business, or maybe like 50-50, or
I'd say he's always been worried about managing risk. And then, but simultaneously, he's been measured risk always. Measured
Yes.
risk always. That's basically how I would define his entire career as a bank CEO. Measured risk and then taking advantage in big bets. Is that First Republic?
Yes, this is like granted the shirt like came really, really dark. So but yeah, this shirt is case an example of Jamie Dimon. Like when regionals were snapping like chopsticks at first. Yeah, like what was he saying then and what was he doing? Uh I agree with you. Wartime, risk manager, check, check, check. But at the same time, when there's an opportunity that he sees and likes
Jumps right
of
on it.
size,
you just
and
like.
yeah, yep,
Do you remember when I was day trading First Republic like over
yes,
and over again? Because my thesis was, I'm like, Jamie Dimon's going to swoop into the rescue, just gut feeling, and from what I could find online. And then his letter literally says that's what happened. He basically is like, we did this because the feds asked me to do it. To some degree. I mean, I'm sure he made it work for him, but
yeah. Oh,
Oh,
it's the way he wrote in his letter is like they probably wouldn't have done, like, outside of the crisis, they probably would have never considered acquiring First Republic assets or the bank, but the government
price.
asked him to do the right thing, and he's profited well at the same time for his shareholders.
Yeah, at the price they paid, that was phenomenal.
Yeah.
Unlike
but-
the other bank that got kind of screwed in that.
Oh,
If they exist anymore, New York community.
Oh, yeah, New York.
oh,
Community.
let's pull them up. I'm gonna. We haven't seen their share price. NYCB.
Yep.
Wow, $2.84.
Very nice.
Yeah, they acquired a bank too, but they didn't have JP Morgan's level of execution. And here we go. There's also like Citizens First or Citizens Bank.
Mhm.
There's another bank out in California that did do it quite well. Here we have a whole. I have to refrain from using curse words, but a whole mess. A whole mess. I don't know what happened with management kind of blundering the ball. They didn't know that as you grow the asset base, you have to take on additional reserves, it seems, and then they ran afoul of regulation, and so suddenly they had to kind of pick up the mess. You would think that executives at a bank would know, even though they're a regional bank. You would think they would know, but they didn't, and we'll see what happens if they go under. Wow, that'll be quite an interesting time. I'll say that. So EWBC I think that's the ticker for the other bank. EWBC is that? No, it's not them.
No.
Definitely not them. But this is another bank. Okay, so
I
you're saying
could
they have a
see-
20% ROE.
With New York Community, I could see how it could work out, but finance is not my game. But I could kind of envision that they could get out of this. All right, but
Yeah. At the end of the day, we just don't know. It's like we always talk about it. They're like a black box.
Yes.
At the end of the day, even if you understand everything that's kind of going on, there's counterparty risk that you can't plan for.
Yeah, because I've tried to look into things from also like a regulatory perspective. I don't think I'm able to ever get my hands on Camel's ratings, but the system that regulators like judge these banks off of with the Camel's metric, rating actually like matters a whole lot. Like if the number is not as up to par or up to standard that they'd like, they will pressure management to do something. And
But
just
like-
one of those things I'm curious with.
because like we all listen to the earnings calls, and either management was blindsided by the increased regulation when they took on the assets they bought during the bank crisis,
Mhm.
or they did a poor job of explaining what they did to like shareholders, right? To say,
Yeah.
okay, we have this increased burden now that we took these assets. So I tend to think it's the first one. So it's like either way, that's not good for management. So how do you trust them to pull you out of this mess when they've kind of failed at this point to some degree? But you got Steve, Mnuchin has come in and swooped in, and maybe he'll save the day. But then you have to hope too, the commercial they have a lot of commercial real estate, I know,
yes,
in the New York City metropolitan area. So that creates another layer of recovery issues.
And yeah, so you do have to worry about, of course, the credit risk. I'm not too familiar if they have a lot of liquidity risk or duration risk on their balance sheet, but yeah, credit risk, CREs, kind of a toxic loan book that you don't want to be affiliated with right now. Yeah, it doesn't look good for management either way you spin it. They were either ill prepared. There's not really a positive spin right now. Besides, you have some big names coming in that might be able to fix it. I think, that's the only positive pitch you can really put here. Sorry, just joined, not pitching it, just pointing out that UWC better returns than big boys, USB, JPM, ETC would have been a good ad during the bank panic last year. Oh, well, no. Very good to point out, Henry. No, don't worry. We're not putting it like you're pitching it.
Yeah.
But yeah, if we I'll take your word for it that it is that, because I'm not going to pull up the ROE right now, but ROE greater than the others. I chose USB as my champion, just simply because I thought it was also a very high quality bank. Let me see actually more or less what the returns would have been during the banking crisis. I didn't buy USB at the exact bottom, but it looks like this one got lower relative to price. And so, yeah, it would have been actually probably better returns buying this bank than USB. So yeah, definitely one I'll kind of put on my watch list and my banking watch list. Actually, I'll do that right now so I don't forget to do that. So, because you never know when we might get another, banking crisis opportunity to kind of pick through the rabble and see which one we can allocate capital to. So,
oh yeah, there was that one bank in the Carolinas that Andrew liked from a historical performance perspective.
I know it was California.
I can't remember for sure.
No, I think it was Carolinas. It was some bank they buy. They're like acquisition monsters.
Yeah, like they do nothing and then something happens and then they're like, yeah, we'll buy. Right price.
I think it's First Citizens Bank. Yeah, I think it is First Citizens Bank shares.
Hey, it's another thing we can hassle Andrew with if we choose to.
Yeah, I'm really sure it is. Yes, it is. FCNCA. We'll put it up here. FCNCA. This one right here.
Yeah, so, I remember it was over $1,000 share.
This one I think was the largest winner of the banking crisis. So this is already on my watch list because Andrew already shared this one with me, and I found this one really interesting.
Yep. Not like trying to one up because it's not. This is not my space at all. Just like you, Dan, not my space. But
well, I guess this provides us discussing banks. This provides us a perfect segue into one of our favorite talking, I guess, beanbags. You want to call it that?
Rightly deserved.
Rightly deserved. And that is a little known bank that no one knows the name of. It's not popular on YouTube whatsoever. No one talks about this.
Sofi.
And that's Sofi. How'd you know based off of that description? So, wow, I didn't even
it's a hidden gem, Bacon. It's a hidden gem.
It's a hidden gem.
It's
I actually
just
didn't know
misunderstood.
So, I mean,
I'm talking about
what have we not said about SoFi amongst all our channels? So we've pretty much covered it from top to bottom as far as what are the prevailing issues. And by the way, so you might be saying that we're short-term minded, but we can maybe go further.
We say, so while we're collecting 200-400% on shorting certain companies, you can feel free people to bag hold a shitty online bank and just lose money or just do nothing. Cool. Hey, but you have lots of channels on YouTube that you can listen to kill your time because you're just holding these bags and you're bored because all you do is lose money, but it's okay. So.
Hey, you recoup the money by by selling people a 10x course.
Have you ever wanted to join a cult? This is your path.
Yeah, and I mean, I can't get the excitement. That's the one thing I can never understand about SoFi. It's like, why that company? Like there's other fintechs that I might, kind of wrap my head around why it could be exciting. For example, I could see Square, right? Blockheads Unite. We're want to form a cult. Our cult is Square, like as a satirical cult. If you guys don't know, you know what, the jig's up, because I basically at this point haven't committed to forming the cult. But we joked in the club that we would form the Blockheads cult. And so if you guys want to become part of the Blockheads cult, welcome. Come to the Capital Mindset Show. And I am your high priest of the Blockheads. That's why we do this, that's our signal that we're, talking and communing with our deity, Blockhead. And Jack Dorsey is, you could say, the prophet. So we follow his lead. And there's a lot of exciting businesses in Block, right? You have Cash App, you have that facilitates, sometimes certain kinds of activities that the law may not, endorse. You also have the Title, which is expensive Spotify that maybe might have been used as an acquisition to have our prophet become friends with a certain celebrity. You also have the traditional Square business, which is actually the best business, in my opinion, of them all. Unironically, not joking, that's not a joke, as a POS system, fantastic. And we can look at this. We can take a cut of all the transactions that pass through our network. Wow. So that's an exciting business. And we don't have to take on any of the credit risk necessarily, even though they bought Afterpay. So that's the one thing I'm like, eh. So taking a look at all that, I understand that one. I can understand some of these other smaller, or not smaller, but lesser known ones like Adyen. Understand that one. PayPal, I can even understand. I can understand PayPal. I can't understand SoFi. Genuinely can't.
Well, like before we started, I read part of Jamie Dimon's letter talked about they have over 2,000 AI and machine learning experts and data scientists working on banking technology and innovation at JP Morgan. And then that's not including like Goldman Sachs has said similar things. Like, be realistic, people. Like, okay, like we've talked about, like, why would those companies pay a premium for SoFi's Galileo? They have significant capex to do their own thing. They have their own machine learning people. Like SoFi is severely outgunned. And when they start trying to push into spaces that actually matter to like Jamie Dimon, like they're going to hit like brick walls, is what I would say. So what they're going to have to do is they're going to have to further double down their efforts into things that the big banks don't want to go into, like the personal loan book and maybe people with questionable credit card people. And but then they have to keep fueling this fire by more customers. That's like explains the NBA deal, right? They have to keep selling the narrative of more customers,
more members,
while they take all this customer deposit money that's growing and then they just funnel it into shittier and shittier loans. It's just a recipe for disaster, I think, at some point.
And
it's not sustainable.
I'm going to pull up a Twitter thread or comment that I was included in while I was on vacation, so I couldn't engage too much. And so I'll sort of expand upon some of the ideas that I was trying to discuss in there. So, okay, so I think I found it. It actually started because of Strongman. So here we go. So if I could zoom in just to...
Oh yeah, I remember.
Wow. Where's my vertical line? Wow. Okay, I guess he's trying to mimic a baby crying. And then it came from this individual tweeting. I don't know who this person is, but my patience is really starting to wear thin with SoFi. This turd stock has done absolutely nothing dating back to last year. Meanwhile, the market's making all-time highs. Even Hood has doubled in price since last year. That's sort of what we were discussing earlier, how, even looking at, even if you bought SoFi and it's been flat the whole time, you have to take into account the opportunity cost that you would have invested in other things, potentially, even just the market. And so taking on a holistic approach as to what your total rate of return is, it still might be hampered just by owning SoFi. We call that dead money, right? And that's excluding if you had bought it when some of these content creators were buying and they kind of hide the fact that they were buying, and they start to slowly manipulate what their cost basis is verbally, but they will never show you. They'll slowly manipulate their cost basis, and purposefully they never kind of state what their cost basis is at any given point in time. So it makes it really easy for them to kind of change it up on you when it's convenient. And you know who I'm talking about. And they might sell you a course in the future that, as potentially as close as you can to a scam, because you don't know that they did do that, and they won't ever show you that they actually 10x. So point being, you get into that sort of cycle, and then now you have, of course, some investors who might be a little frustrated. I remember that individual was really frustrated with Tesla because the stock price didn't go up. They don't understand why. And so I was added at some point during this conversation, but we'll read through the whole conversation. More time to accumulate SoFi at cheap prices. Win, 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 win. I think Hal is being sarcastic.
Yes.
And then true, but saying this for years, though, eventually it's got to go up. No, that's actually not true.
No, it does not.
No.
They're going to keep diluting you to death. It doesn't have to go up.
Yeah.
There are some people who believe that stocks have to go up. But by the way, for anyone this is the first time you're hearing this, the vast majority of stock market returns happen from a handful of stocks. Most stocks actually don't do very well. So the S&P 500, for example, has always historically a lot of its performance you can attribute to a handful of stocks. So no, stocks don't have to come back up. They can literally be bad investments. And then we have so these personal loans concern me, and it's an online bank, not really a big deal. Capital Minds has some good videos on YouTube on SoFi, and we do.
Yep.
And then this part comes up. This is very
I didn't see that.
Average FICO of these loans is 760, though. And so they had a good credit score. There's a very important point from Hal. Hal is actually he understood the point. They had a good credit score, and then what happened in their life? They needed to take out an unsecured personal loan? ? Very risky loans. Check out Capital Mindset discusses this and much else about SoFi in great detail. So thank you for the shout out, Hal, by the way. And then so this last point here, where I sort of came in here, but I didn't get to expand because I was in the middle of a dinner on vacation, so I couldn't really get into it. But 630 to 680 is a good credit score. 760 is a great credit score. You don't get a 760 by making boneheaded financial decisions. That's not to say it will never happen, but I don't think it will be very common, and it hasn't been up to this point. So I came in a little bit with a joking response because he said you don't get to 760 by making boneheaded financial decisions, and I said you don't get a personal loan by not making boneheaded decisions. So you get yourself into a debt pickle, and that's basically why you need to take on a personal loan. I'll give you examples of why you would need a personal loan. You blew out your credit cards. You accumulated a ton of credit. It happens. It can happen, right? And you don't make enough income to cover it. The interest is really crippling because it's now 20%. You want to consolidate it into one loan, lower the rate, and that's why you might get a personal loan. You'll have a good credit score up until that point because maybe you have a lot of credit extended to you, but your credit utilization may not be that crazy high, because some people you can have like hundreds of thousands of dollars in credit limit, and still to that person's income, $20,000-$30,000 of credbe card loans is quite a bit for them, and so that's maybe where a personal loan can come in. So your credit utilization won't be that high. And again, when you're dealing with an individual who has got a personal loan, something has happened in their life that, not for better, there's no better, but something's happened. They need a fix, and it's like a Band-Aid provided to someone that's going through a tough time. That's all a personal loan is. There are instances where you might see personal loans extended to people who are doing household renovations. That's not uncommon. But a lot of times, the vast majority is credit consolidation of some kind. In fact, I actually know a person, by the way, this is kind of a side comment. I know one person, if you're by any chance listening, I'm sorry I'm bringing your story up, but I know one person who used a personal loan for a car. And yes,
That's not a good idea.
Yeah.
know.
Wait, what?
it's
That's
not
a really bad idea.
that was my opinion. That was my opinion. But they were like, but it's not secured, blah, 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 blah. And I'm like, well, you're paying a way higher interest rate. The thing is that they would not get the loan for the car loan. They wouldn't get extended to the car loan, but they got extended the personal loan. I won't say what bank.
No. Does it rhyme with SoFi?
No.
Okay. That'd be
No.
funny.
Oh boy.
It rhymes with SoFi, doesn't it?
You go into the car company, they're like, how many cosigners can you get? 2, 3, just asking.
It's more anecdotal observation, probably, one-off case. But yeah, the person got a personal loan when they didn't get a car loan. And they have a good credit score. They've never defaulted on their debts in the past.
Oh. Okay.
No, they have a good credit score. They never defaulted on debts in the past. I not to do the adult bragging, but I've had a good credit score for a very long time, even when I was a college student. So way back when, I had a good credit score. If you had lent me money while I was a college student, good luck to you. that would have been hilarious. But statistically, I would have looked pretty good on your books. You would have advertised, me as one of that part of the population. And we had some club members also say, "Hey, I'm a college student. I have a 760 plus credit score right now. I've had a credit card for quite some time. I have a job, and it doesn't make much, but hey, I have a good credit score because I've paid off some debts in the past, and so I've accumulated some credit history." But you wouldn't argue that they're the upstanding person, and that's always going to be the rule of thumb with personal loans: is you are going up the risk curve, and you're not dealing with the clientele that the bigger banks salivate over. You're dealing with the crumbs that they don't really want to deal with. Like, they do have offerings, but I think a bank like JP Morgan Chase is going to be more interested in providing or extending personal lines of credit to high net worth individuals, because the number one concern of a bank is not actually how much interest that they can make off of you. That's secondary, even though that is important. It's, are you going to get them? Are you going to get your money back? If I know I can get my money back, for example, if I can guarantee that I'm going to get my money back, and you offer me a much lower rate of interest, I'm going to lend to you, rather than the person who I'm not so sure, but I can collect 15% off of. So, and this is genuinely true. Like, when I tell people, hey, if you focus on building your asset base, you focus on saving, investing, you'll start to notice after a certain point, the bank's going to come to you, or not come to you, but you can go to the bank and you need certain kinds of credit. And you'll find out that there's products out there that they can almost tailor make to your specific needs. Or in more so, like, often cases, you'll get discounts on interest rates that someone who doesn't have a strong relation with that bank won't get. So I don't know if at some point, Andrew would like to speak on this, but or expand on it. But in business, when you're doing a relationship with like a smaller bank, you'll often find that is also more so the case. You actually don't need that big of a relation. Well, you don't need to be that big of a company to have that kind of relationship if it's a smaller bank, is what I'm getting at. Anyways, without getting into that. Sofi, Dan, when are you gonna exit your leaps? Sorry, that had to be the gaslight of the day. He was distracted, so I want to throw that in there.
I enjoy I think some of them like switch to Hood. I was harassing some of those channels. I'm like, so when are you guys going to quit and admit failure and then switch to Hood when it's at all-time high or when it's rising?
Wait, can I just say, like, thank you, Marcel, for just like backing us up here. Thank you. As someone who underwrites loans, I agree with this message. Thank you.
And it's just like funny because like these channels, like for the most part, SoFi channels, they can't disassociate good things that SoFi does for customers and buying SoFi as an investor. Like they can't segregate the two, which is hilarious because it's like, oh, look, they're offering like the highest interest rate on checking accounts in the industry. Again, okay, pause. That's a cost to the business, but if you're a customer, it's great. But they just assume it's good for everybody. And it just kills me. Like the NBA deal, we don't know what they paid for the NBA deal yet. And I think The NBA does not do deals, for nothing. And they have SoFi on this courts now. I bet you they paid a lot for that deal. Next time we see filings, that's going to be shocking, I think, what they paid for it.
And it's not necessarily true that SoFi getting new members is necessarily a good thing, because, for example, I could become a member of SoFi today. I could get a lower interest rate than what my current bank offers me. By the way, fun fact, everyone, the bigger banks, they do offer you high interest rate products. And by the way, you can get high interest rate products just on money markets. Like, it's not something special. But anyways, let's say you get all these new members, and now those are not customers. Think of them, those are all liabilities. They're customers once they borrow money from you. Those are your customers. Anyone who's borrowing money from a bank. Anyone who's depositing money into you, that is like a creditor. They're giving you money. They're loaning money to you. You're giving them a rate in return. And in order to attract that money, you offer a higher rate of interest than a lot of your competitors. And that growth now requires that all that capital needs to find a home. SoFi needs to find a home for that capital. What are they doing with that capital? Well, there's a couple things a bank could do. They could lend it out to other banks. They could buy, debt on the open market. They could do whatever, but they have to generate a spread. SoFi's electing to get a lot of that spread from personal loans. And I think so even to Dan's point, we don't know what they paid for. They get on the NBA. They're going to get this flood of members potentially. And that you might think that's a good thing, but it depends. It really does depend. What are they going to do with all that capital? How much do they lever up? The assets that they get involved with are really important. And you have companies like JP Morgan Chase. I'm going to keep using JP Morgan Chase because we talked about Jamie Dimon earlier. Their cost of capital is extremely low. And so they don't really have to go far out the risk curve to generate that spread. So they're in a really advantageous position. I mean, heck, if they grab the capital that they're given at their cost, which is basically nothing, and go out and buy treasuries with it, basically taking on no risk at all and then generating a spread there. I mean, it's really good. But yeah, we have a lot of questions on some interesting companies. Oh boy, I like where this is going, because we don't want to talk about the short until Andrew gets here. We will not talk about the short. We'll talk about everything else but that. Okay, so we have a couple questions coming in here. Welcome back from vacation. Good to be back. Thoughts and oh gosh. All right, great questions, everyone. All right.
Oh,
so
geez.
Yeah, no, lots of questions.
Yeah.
Lots of content to talk about.
Yeah, because I saw one of the tickers also like a little bit more recently, also on the ticker that I looked at in the past, and I'm aware of.
Google might or wants to buy HubSpot. What do you think? Do you think big tech M&A will be tougher? Is scrutiny of Lena Khan hating big tech? Well, you know what? Lena Khan has she changes depending on what big tech we're talking about, because clearly Microsoft can buy Activision Blizzard and just, that's fine. But Amazon buying a vacuum cleaner, that's not fine. Google buying HubSpot's probably not fine. So I don't know. I don't know what to tell you.
If they have robot vacuums, you're screwed.
It's over.
It's dead.
It's over. So HubSpot ticker, what is it? Hub.
If you're two smaller airlines, it dies. And deal dies.
Yeah, it's completely
international
over.
Video game company. Okay. Robot vacuums. That's a bridge too far.
I know that. Okay. It hasn't been growing all too much. It's been growing, but all right. So you have like another CRM system. I think, okay. So if it goes through, that will be really interesting to kind of signify where some of the big tech names might be entering into this new B2B relationship with a lot of their cloud customers, that they might also be offering CRM solutions. So this would further be integrating it. I don't know how difficult it will be for Alphabet to sort of build a HubSpot style business internally, which is why they're probably going for the acquisition right now. And I don't really know what that entails of how that's going to be implemented. my bird's eye view, or kind of my quick thoughts on it, is it seems interesting because they already have that cloud business connection with a lot of their clients. They're going to be buying already a developed business with a good amount of customers, and how they integrate with that in their cloud business. I see a lot of reasons for Lena Khan to, I called her Lisa, for Lena Khan to be against this. She, as long as she's in power, which maybe you make a case of a different president winning in November, and therefore a different head, then you want to be cautious. I'd bet more on it getting challenged rather than passing. And if she's still in her position over the next 4 years or so, or however long, yeah, I see that one getting challenged. Just, you're right, because it's big tech. In this case, it seems like there's some more obvious vertical integrations that she's going to argue make it monopolistic and isn't fair to some other competitors. But Becky, quick on
never made money. Like, literally, look at HubSpot. Like, net income, like, nothing. Unbelievable.
Nice.
$30 billion company. Can't make money.
The only thing that I've seen around is the idea that Google would be able to either expand its revenue more if it gets HubSpot and gets more data, but I don't know. It's a spot where I'm weak. That's why I let the index do my heavy lifting when it comes to this one.
Dex, how dare you?
I think the EU would say something. They don't like any big tech anymore.
Yep.
Yeah.
EU, it's just like they come in the door, they're just like
okay. A lot of ground here to cover.
Wow.
Three companies with very different unique details.
We'll tackle it one at a time. UNH. I would like to own UNH at the price. I don't know. I don't know what price it is, but there's a price I would really like to own a UNH.
Yes. Like, if we really went like recession, like dark times, like that's one of those companies you like, ooh, keep an eye on that one.
Yeah.
I don't think they're going anywhere. And in fact, they've really been moving across time, vertically integrating a lot of healthcare services. And I think that's going to be more so the push in the future. And UNH, of any of their competitors, has the scale to do it. And I think there are challenges to properly vertical integrating healthcare. There's a lot of, let's call it, I'm going to call it, like, I don't know if anyone's called it this, but I'm going to call it, maybe giving it my own unique name, cost. Well, it's not unique. It's just putting two words together to best describe the idea, but cost leakages in US healthcare. So you see like what a medical bill is, right? And you see like, oh, there's a ton of money. And then you look at, for example, there's this huge bill, hospitals must make a killing. And then you kind of expand upon that. You look at hospital income statements of the publicly traded ones. They make like 8% margins. Like, what? That's terrible. Where's the money going? And then you start to go down the rabbit hole slowly, and you're like, okay, well, doctor salaries in the US are really high compared to the world. That's maybe one, but it can't explain all of it. Okay, pharmaceutical companies, they have decently good margins. They're rewarded for their patents. But eventually the drugs go into generic, and then the generics don't make as much. The margin's way, way, way smaller. And then you have medical device businesses. So are the leakages going out there? If so, that maybe is the explanation, but it doesn't seem like it adds up either. Some people argue CEOs at management teams, but I don't think that accounts for it either. So it's a very large and complicated ecosystem in the United States, at least. And I imagine elsewhere in the world too, but I'm speaking on behalf of the United States. United Health is, as an organization, really trying to tackle certain parts of it, but it's clearly, from an outsider looking in, who's not I'm not an expert in it. I appreciate its complexity. And so I can imagine that United Health, even with its scale, is going to find challenges there. So, but as an insurance business, They're very good. By the way, I have I know they may not be the best. I actually have United Health as my healthcare insurance provider. So I just go direct. Okay.
Starbucks and Apple.
Starbucks.
That one not for me, just because they sell in China. That risk is concerning for me, but
There's a lot of people watching us right now, I know, that either
Yeah.
own or really vested interest in Starbucks. So I don't think the setup is that great at the current price.
Same.
Do you really understand what their growth? Some people, like, if you're in it, did you actually read management's plan like a year, maybe a year and a half ago, of how they plan to grow? When the original, what was the name of the original CEO? Howard Schultz.
Yeah.
When Schultz came back, they outlaid kind of like their path to getting back on track and growing the company. It's very aggressive, I think, in what they want to do. The modernization of their equipment, increased training, they're probably going to have more staff to do what they wanted with improving the speed of the drinks. And China, heavily dependent on China, more than you probably even think, unless you have, I don't know, some of the people that are investing in it, I don't think they really understood how dependent Starbucks will be on China growth. And we see what China's struggling with right now.
Yeah, and it's funny.
I just don't see a compelling will this really generate alpha over like the SP 500? Significant alpha is what I look for nowadays. I very question if this would have it outperform the SP 500 by a significant amount. I don't know.
Yeah, and honestly, I mean, when I've modeled it out, Starbucks, I come up to a price of interest. You're not gonna even believe this. You're gonna be like, what the fuck? Okay, Paul Gabriel. Literally. But no, genuinely, I wouldn't be interested in Starbucks until actually around the mid 50s, because I come to a price point of where I think they're actually going to grow at 50, if I'm being precise, $50.88. But I never go like wait for that. It's like that's the range of where I'm interested.
Okay, Paul Gabriel.
Yeah,
I've
exactly.
owned it. I bought it during lockdown I think in the 70s, and I ran it up to like 105. And over $100, I'm like looking at it, I'm like, I can't this is very generous stock price at that point. Which was the same thing I came to with like Raytheon, like around $100. It's just tough. It's very tough at this point. It's a big company at this point.
If I can confidently estimate, growth rates in excess of like 10%, confidently, which this just I require almost like an additional discount just simply because of what Bacon said, because I agree that's kind of where that price point comes from. But if you kind of take that out, it actually looks quite fair around the 70s, which you're not too far away. Right, you're removing the Paul Gabriel aspect.
Honestly, yeah. If it dipped to 70, it's 70. It's like, okay, it's on the table now, I think. But I'm leaning more towards you under 70.
Yeah.
But and for the audience's curiosity, the exact number 70.35 is like, but that's not like if it doesn't hit that, I'm not touching. No, that's not how it works. But yeah, that's kind of more or less the evaluation.
Do you know, Fabio, the amount of dividends? What's percentage of their operating cash flow is dividend payments at this point? What do you think?
But by the way you just said that, it seems it's going to be a lot, like 60%.
It's like 42% ish.
Oh, okay, so it's higher than when I remembered it, but
looks like 2023 they paid out like 2.4 billion in dividends, and they generated operating cash flow of like 6 billion. So that's getting concerning also, I think. I'd like to see them cut the dividend in half, honestly.
Do you remember the story of what happened after Schultz left and that other guy took over, and then Schultz had to come back? Do you remember what he did? Case study of exactly what you would not really want the business to do as far as business health. And that's why I think Schultz was kind of like, whoa there. So it worked for stock price go up over the short term. Basically, he took on debt. He started levering up the balance sheet where Starbucks had a pristine balance sheet, like beautiful. And as a manager, sometimes we want to lever things up. Sometimes we're like, let's lever up this bad boy. Let's get some credit in here. Let's run things a little bit leaner. And they actually bought back stock with the debt.
Very nice.
But the stock was range
Lowe's
bound.
did it too. Lowe's did the same thing.
Yeah, they did. But the stock was range bound for quite some time, from like 2015 to like 2018, 2019. I mean, that thing was like 50, 50, 50, getting 60, 50. But it was flat. I don't want to say it was like Microsoft, because Microsoft's a little different, but similar to that. And yeah, suddenly borrowing money, buying back stock. And then, I think COVID happened right there, or not. I don't think, COVID didn't happen then and there. It was the sell off in 2018 right here. And then you had the big ramp up, then COVID, and then Schultz comes in at some point. But Schultz coming back, I think he was concerned with the what the prior CEO had done, which is not really improving the business, sort of more so focusing on financial engineering. This new CEO is probably, focused on the operations. He's got, the head on his shoulders for, let's improve the business. More power to him. But hey, that worked. Okay, the financial engineering worked. Share price went up. But if you're a long-term investor in your business owner mindset, what you're basically doing is kind of making the business a little bit worse for you. So who cares about the short-term price movement?
I think, to me, like the one, not even the expansion plans really. I like China. Their what was it? The in-house finance. I can't remember now. They had a membership club. I may be wrong now. It's been like a year since I thought of it. I think, didn't they have a paid membership club, or was it maybe just a Starbucks card? So I'd have to look it up, but I thought it was kind of interesting. But
Starbucks credit card?
No, it was just like a membership card to Starbucks.
Oh, like the app, like a reward system?
It's been like a while since I'd have to remind myself what it was.
I mean, they had. I want to say they've had a loyalty program, but
Forever.
how monetized that is, I'm not sure. I mean, it does incentivize people to, have repeat business for sure. But yeah, just not for me. Still, even with the 52-week low, personally. Feel free to laugh at me when it runs up eventually.
All right, and then we have the last company, Apple, my Dapple. I really want to own Apple.
Yeah,
I'm
because
just gonna say it.
You're not indexed like to the degree that I am, so you're incentivized to own Apple.
I really do want to own it.
I struggle. I really, because if you count like my S&P, my SCHG, I'm already so in Apple. It's hard for me to envision buying like the individual stock.
No, but it's just a company I really appreciate.
No, I get it. It's good, like a long-term hold, like this in Amazon.
Apple, Amazon too, but Apple has so many levers that it can just pull to make money. They have business life on easy mode at this point. As long as they continue to capture the connection an individual has to the entire world, which is what I would describe the iPhone, and the stickiness of this product. And if they manage to, for example, not allow Meta to take over the virtual reality or augmented reality space, that's mainly the biggest risk I see. Because, for example, if they finally at one point in time master this form factor for augmented reality, which we're so far away from that, because there's legitimate, currently there's legitimate physical limitations with that capability. But getting this form factor with augmented reality, if they manage to do that at some point in time and still kind of capture the audience, they'll be fine. They'll be fine. If some other company manages to do that, it's Jover. It's Jover because that would be a point in time where this is no longer really necessary. And I don't want to count them completely out of the assistant. I saw that Apple is going to move forward with integrating a LLM assistant in their phones, and there were rumors that it was going to be Alphabet, which I don't know if Apple's going to just let that slide. I think Apple has the capital and capability to develop their own, and honestly, if it's really easy to use, I actually could see that circumventing most of the other LLM assistants and more interactions with that LLM than anything else. I don't want to count them out there, but they're, I think, still a contender that people kind of just dismiss from here. So I want to own them. I cannot stomach the price, and I hate their buybacks. I despise their buybacks. I really think that was, I mean, I'm wrong so far, but I think that was a mistake. I think that they should have, I don't know, just freaking piled on the cash, paid special dividends along the way, and threatened buybacks. But don't do it. Just threaten it. Just be like, hey, our stock goes any lower. We're going to buy up all the shares. But no, I don't get what I want.
No.
So,
yep.
You guys don't want to own Apple? Is that what you guys are saying?
I'm heavily indexed, so like the incentive for me to buy Apple right now, that I'm sorry. Like I agree with what Dan said. Where if you're heavily indexed, the incentive is maybe not as strong.
I don't use Apple products. That's another part. I understand people's. I appreciate it, but I literally have nothing Apple. I think I have an iPod. It's like 2017, so I'm not part of their universe. Don't really care to be, but
I get
it, I guess. But
yeah. Like if you're not indexed, then 52-week low for Apple, maybe right now, but
But it's like, what do they meaningfully do other than phones and run the app services or run app business services?
Yeah, because they have a lot of thumbs and a lot of different pies, but
it all kind of
biggest of
comes
the
back.
big. Yeah.
Because if they lose this, then you could argue they lose AirPods. You could argue they lose the watch. You could argue all these other things start to fall apart, except for the computers. So that's why I think it's really important for them. It's not as important for Meta, although for Meta, it's like that's what takes them to the next level if somehow they pull that off.
Yep.
But they don't need that. Apple needs that. They cannot afford to fail.
Interesting point. Apple's whole business on the phone. So remember, like a year or like 2 years ago, everyone's like, Apple's going to replace all their suppliers for different components of their phones so they could bring it in house and save money. My argument was like, the phone is so vital to Apple's business, they would not risk going with a potentially defective or inferior product in their phones. And any risk of that would be like suicide for them. When we were talking about like them replacing Broadcom part components, I'm like, why would Apple, whose whole business is based on the phone, do this to save a few dollars at the potential of a disaster of a phone launch? To me, I honestly don't see them doing any of. I think it's too much of a risk to them replace Qualcomm or Broadcom product or components to their phone. Your phone is your product. You put your best product out there, right? I don't understand why they would bring that in house. I think that could be a disaster.
At least for the time being, I think Apple is aware when their product, what they've come up with, isn't up to snuff to what the competitors have, or not competitors, but what their suppliers have. And so I think they're working on it. And there's always a looming threat. There's some products or companies out there that I don't think are that much a threat because it's such a small price per phone, so it's not really their main focal points. But like, for example, Qualcomm's products, I think they hate Qualcomm. They're going to use them because they need them.
Well, they're paying them; they have no choice.
No choice, absolutely. But that's one of the companies they want more than anything to really just make their own thing and go in-house. So Qualcomm's going to be fine until one day we find out. If we find out, that's just a looming threat that I have with Qualcomm. Investing in Qualcomm, even though they're also diversified, but that news alone would ding the stock quite a bit.
Are you saying if a company loses a contract that's a significant part of the business, the stock might get cut in half?
I see where you're going. I see where you're going.
That is alluding to something.
Where's Andrew?
We'll wait for Andrew whenever Andrew gets here. Oh man. All right. For those of you who are just joining us in, because we have now 126, 130 people across platforms. We're going to be sharing our shorts.
Yep.
Soon.
Andrew.
As soon as Andrew, we can't talk about it until Andrew gets here, because that'll just feel wrong. That would just feel wrong. Okay, so I'm trying to see. There were a bunch of questions up there. I'm trying to get back to them.
There was one about FTC and Capri. Not to belittle the person. It's just more of April 15th, I believe. So Monday? Question mark.
Yeah, Monday will be the EU.
Yeah.
But they can push it back.
Yeah. So it has fallen even more. Like I think I last saw 39. So the spread is, if it was legitimate somewhat recently,
wrong one.
It seems like it's even more legitimate. That being said, when I last looked at it, my memory was, wow, that's a lot of debt, and the brands are, you have Versace and the rest are meh. And even then, Versace, it's not like anything that LVMH holds. So, Hey, there he is. There he is.
Woo, woo, woo. All right.
Yeah, there we go. Dean Kamen.
I need to pour more. Cheers to this man.
Should I go get a glass?
I got my water in honor of you, Andrew.
I also have a water.
It's a weird term for whiskey, but
it's on ice.
To Andrew. You made me a lot of money, you motherfucker. I can't swear. I don't want to demonetize.
There's nothing in here, but
Monday was a fun day.
Monday was a fun day.
I woke up at like 6:30 and I'm like, I want to scream like, guys. And I'm like, oh, none of you are awake. Damn it.
I was awake.
Have you guys?
I'm like, you beautiful bastards. Look what happened.
Did you guys talk about this yet?
No, we were waiting on you. We said it would be weird to talk about it without you being here.
Oh, okay.
So the people wanted it. They were asking for it constantly. No one asked. Literally no one asked. We're literally going to be showing this to people's face, and no one asked for it. But we're going to do it anyways, because we will have a lot of fun talking.
Listen, we've been closer to a 10-bagger than Tanner ever will. Okay, because we 4x this mother effort.
Dropping names. Yeah, in a single day, by the way.
4x.
At one point, it was up 6x. I should have sold at 6x.
I sold.
It was bouncing around. Yeah. I'm like, oh my god.
Yeah, that bid ass spread will get you every time.
I might have gotten the best exit, but I wouldn't be surprised if this stock is down a ton on Monday.
Oh, geopolitical.
Iran attacked Israel.
Yeah. Don't try and segue out of this.
The event, Andrew.
Oh.
We call it the event.
Are you not allowed to say that?
We don't know.
We don't know. Yeah.
Oh.
It's like a pandy wendy instead of other words.
Alphabet, our great investment of Alphabet has implemented a new artificial intelligence that sweeps through videos and is just going after it.
Yeah.
Dude, it's funny because I listen to like for fun, to make fun of like red pill content and stuff, and I'm starting to understand why they have like all these goofy acronyms on things, or like things that they say that aren't really like the actual word. And it's so stupid because all you're doing is no one's changing the message, they're just changing the verbiage.
Yes.
Yep.
And
we create new language.
Yep. Yeah, like our boy Jeremy with, like, what did he do? Rona, and he's got another one for Planet 13-esque stocks.
Oh. Anyway,
So,
yeah.
okay.
Should we get into it?
Yeah,
Yeah,
ticker.
let's do it. Let's do it.
Ticker.
So victory lap time.
Yeah, victory lap time.
You got to put a banner, just like victory lap time.
All right, banner time.
Yeah, he said like Jack Jackson. That's what it was.
I think didn't we all have like a spread on strikes?
Yes.
Yeah.
Look at that thing.
Okay.
Look at it go.
Go 5. Is it 5 days? Is that all we need, or we need more than that? Okay, no. You need 1 month view at least.
There we go.
Yep.
There.
Oh, and I have the so for anyone wondering, by the way, you can join the club and link in the description below. But this was actually a short pitch that we had on 2 weeks ago. March 26, 2024, and I actually have video pulled up. Obviously, you can't see it because it's for club members only. But
no free lunches.
Yeah.
Hey, shout out Leo. Love that, Leo.
The very first discussion that we had was, of course, the Perry pitch. I don't even like their own private streams. Look at that.
Does it matter?
I'm gonna like it. No, it doesn't matter. It literally doesn't matter. But we have 36 likes from the club members, and yep.
So it was 22:45 that day. I don't think it ever went above 22:45 after that.
Oops.
Dude, we ticked it. We top ticked it. I mean, dude, just for reference, for everyone watching, Fabio and I were talking about shorting this like 6 months ago, though. We would have,
So
when you told me about it, like, I think maybe 4 or 5 days before the pitch. So I'm like feverishly like looking at Perry, every mention of Microsoft in their filings. So I read the outline of the contracts. And then I'm like, first thing I was thinking, I'm like, Microsoft, I heard what you said, and I'm like, okay, Microsoft never cared about Bing, but now that ChatGPT is in the K is a thing, they're gonna want to pursue this now and be interested. I'm like, they're gonna take this business back and boot Perry on.
Yeah, I guess
I was in. It's like 2 days. I was in. I got it. So
we should provide the context for some parts of the thesis.
Yeah,
like high level.
High level was, we looked at this company, and this is a stock I followed for a long time. And one of the things that the whole investment thesis on this company hinges on is a contract that they've renewed every 4 years with Microsoft dating back to 2010. And if you look at the history of Microsoft really hasn't cared about Bing. It's a contract with Bing, which is Microsoft, to be the supplier of their ads. Like I think they're more like sell side for them. And when we were looking at this, the thought was Microsoft is going to move off of this. The reason why is to not go into too much detail, but because we cover it fully. If you want to go back and if you want to join the club, watch the pitch just to see why we were right in retrospect. but basically, from people I've talked to in the industry, Perry is not, their product sucks. And Microsoft has never cared because Microsoft's never cared about Bing. But like you said, my thought was with ChatGPT coming online, with their increased focus on, Satya famously said, like, we want to make Google dance. So if you have Satya focusing that much on everything, they're going to be taking a much closer look into their ads, their ad suppliers. And so we bought puts. And
you guys want to all share the strikes?
Well, let me also just say, it's really funny because my thought was the contract's going to expire in November.
Yeah.
And so they're either not going to get the contract or they're going to get terms in the contract that's super unfavorable for them. And just so, like I said, the whole investment thesis hinges on this because it's like 35 to 40% of the revenue. And so once, and not just that, one of the things when I was looking at Perion that the investment thesis hinges on this because one of the things that they pitched, if you go back to 22, was since we have all this data from Microsoft, we're able to take that data and then feed it into our system like a flywheel effect, have better algorithms because of it, and make a better product. And so not only does the search fall apart, but then that's going to impact display, which is already falling apart for them and had negative growth year over year. So that was kind of the thought. And we can talk about the strikes. I was more conservative than you degens, but for the most part.
Oh my gosh! You see, Andrew says it that way. I went with a different strike, and Fabio is like, "No, bacon."
You know what's so all my contracts.
Yeah. I kept calling bacon bullish. I was like, "Bacon, you're bullish," and he's like, "I bought fucking puts."
All my contracts were July, and then I rolled them to January, which well.
If Jesse was,
dude, so it could have been like
Jesse bought
6x if I.
Jesse's puts were all July expiries.
Oh, dang. So we also had some variety.
I had a spread though, because for some reason my brain thinks that's like safer or better way to do this, even though it isn't. It doesn't matter. But so I did like 20, 15, 12, 50 January, which gave me the whole contract term. So.
I was mostly at the 12 strike, or not 12, I'm sorry, 20 strike. After Fabio kind of laid out a good point saying, yes. Dude, if anything happens to this contract, the thing's just going to dump. Yes. I was like, oh, good point. Yeah, I bought a bunch of the 1250 puts.
I was more 15, 1250 than 20s after we talked about it more. Because I'm like, you are right. Like, if this happens, this is catastrophic. Like, so I was mostly the 15 and 1250. But
my entire Perry put, all of it, 1250.
Yeah.
Yeah, no, but you got to understand. Okay,
what is it now? 1250?
No. People need to understand. Like, that was the price.
Yeah, it was 22.45 at the time. So it was like
they all called me crazy.
Like, I was even like,
first they call you crazy, then you change the world.
Yeah, first they call you crazy.
So Elizabeth Holmes.
That's literally like the most Wall Street bets that I think the Capital Mindset Club has experienced so far. It's just like, yeah, if I was just bought $12. Well, I didn't bet the farm, so it's not. No. But
you guys said I did not bet. I don't. $4,000 wasn't that bad, but
I thought you went heavier than that.
No.
I remember your speculative account rules, Stan.
There was.
If I plowed my Disney money that I sold into this,
yeah.
Ooh. I could have put $15,000 puts.
There were different figures in the holding co and in the personal, but percent allocation was roughly the same. So, but
yeah,
my entire vacation was more than paid for. And then so on like a single day, and it was the last day of the vacation that I got like the notification, like, oh, oh shit, oh, Google just demonetized us. Said the S word. Oopsie.
Oopsie.
Oh, Snapple.
I was not uncertain after Andrew told me about this.
Yeah.
We need to make that meme with like me and the other person from the community that was Polish Perry.
No. Yeah.
Well, okay. One point he did say, okay, the certain person, he's like, why would they? This was one. He's like, why would they not renew it because they've renewed it before? And I'm like, well, if you've been following AI and what the company's saying in their filings, you realize, okay, what has changed? Well, their focus on artificial intelligence, chat G2P. So now the company's more involved in Bing. So the answer is because they care more now, like, is why they could get rid of it. But.
Yeah, and to be fair, like, this is a classic, I think, when it was at $20, I mean, in retrospect, obviously, that's a value trap. Like, that's the definition of it. Because if you look at it optically, you're like, this company's cheap and they're growing fast. What's wrong? Mm-hmm. And that's why it's so important not to just look at like multiples, but actually look at the fundamental what's going on with the business.
Yes.
Dude,
I should clarify for Elemental because I saw two people kind of say Elemental and Henry. Henry said it as a joke. We got a short squeeze them. No, we've all. I think all of us.
Yeah, we're out.
Yeah, we're completely out. Like
that was.
Unfortunately,
I short companies on a regular basis more than other people, but like. There's only so like okay at $22 there's a lot of meat on the bone. That's the best way to put it. There's not a lot of meat on the bone at $12. Like it could still drop, but
there's this
You
company's
gotta
almost a cash
exit
value.
at some point.
They're
Like,
almost a cash value.
Mhm.
That's why I think the main discussion or comment that I received when I did the 1250 strike was like, Fabio, that's like
Yeah, I think I did the calculation. They have like $11 worth of cash per share.
and I was like, nah, it'll go that low. My insider has informed me.
The Benjamin Graham people are like, tell me more.
You need to understand that the 1250 strike was in the money. It was in the money.
It's
It's currently in the money if I had held still, but at that day on Monday, it got in the money. Like that's the insanity.
Yeah, what was it? 1320, I think, when I bailed. Well, I bailed in the morning and then I waited that evening and then a little bit at the end the next day, I think I was out. So
the highest percentage, I won't get into dollar figures. The holding co didn't, the holding co also made like $4,000, but percentages, because that's more important. At the peak, it was 600%. The exit price or the exit percentage was 400, a little over 400%. So I didn't get the best perfect exit.
Yeah, and I think I ended up getting like a 400.
who's long on Perry? Good God.
He's saying no. Marcel's saying now you guys long pair. Like, is it an overreaction or is it toxic waste?
Well, we thought it was going to kind of dead cat bounce a bit.
Yeah, there was that possibility.
Because everyone would look at the cash pile and their share buyback plan and be like, oh, it's a value at $12 or something. What?
Well, the problem is, depending on how much, this is like the most interesting situation for a buyback program, where it might actually be bad at depressed multiples because the company is like going through a really tough time.
Mhm.
Or like you might just prefer to say like, don't use your cash.
Yes.
Well, remember what we said in the Perry pitch, the Perry short pitch. There was a red flag.
Yeah.
Okay.
Yes. Yeah.
Well, I don't know if we should go into that detail on the cash.
On how they're using it?
Yeah.
No, go into it. That's fine.
Okay. So one thing that we noticed that we took keen interest in was, of course, the possibility. Again, we gave you basically the overview of what the short thesis was, and that the cash pile may not have been from a position of strength, but a position of weakness, a defensive measure. That in this instance, exactly what Andrew just said, as a manager himself would say, there's probably a tough time maybe coming on the horizon. Would be good and nice to hold a good amount of cash to get us through the other side, because we don't want to just crash and burn. Assuming that the cash, we had no claims that it's fraudulent or anything like that. That's a separate discussion. But there are kind of like oddities with the behavior, just oddities. And so those oddities that we observed kind of led us also to consider that potentially, this cash might not be as much of a saving grace as other investors might think. So time will tell.
I definitely think.
And I've looked at I've done videos on other companies that have had huge cash piles. I don't understand why people think that's such a positive thing in general. To me, it's either neutral or it's actually like a negative on a company to just have some huge pile of cash sitting there to say, oh, it's a great company. Look at all the money they have. It's like, but a company exists to create, to produce, operating cash flow and then do something with those funds.
No,
why are you paying that? Why are you investing in them just to hold the money? Like, I don't think that's a good thing.
There's a company I hold, and when we showed a screenshot of the Perry short pitch, it was in there, so I think it's fine. But Corpay or Fleet Core, I like one of the things someone said where they're asking him something like, "Why aren't you paying off your debt more aggressively?" And he said something like, "Our debts, I mean, they're paying off their debt slowly," but he said, "Well, our debt's 6% interest." He goes, "Our minimum investment threshold's way above 6%." So, and that's kind of the position I would have with cash right now. People are like, "Well, you get cash, you get 5% of your cash," and it's like a company should get a higher ROIC than 5%.
Yeah. Otherwise, what the hell are they doing?
Yeah. Now, I think the problem is with some tech companies, they just have like such efficient. It's like tech gets in this like some of the best run tech companies. I feel like they get in a position where it's like, okay, the business we have is so good, we can invest in this business that has a higher return than our cash, but then our margins drop. The street doesn't like that. I think that's what happens.
Yep.
Dan likes manufacturing companies though; they never have cash on their balance sheet. So
For the most part, I mean, a lot of
No,
them
they
have their
don't.
own finance arms. They don't
Yeah.
need a lot of cash. They,
Yep.
unlike Tesla, like everyone else has finance wings. So
So yeah,
what's Fabio thinking? Fabio has a thought in his brain right now.
No, well, it was actually clouded by the another thought about GE. When you
oh,
mentioned industrials, but yeah. Would you guys short again if we get some more meat on the bones, or maybe we even just we're just shooting the can right now, but um,
I don't think risk
Go
reward
long.
risk reward's good here for to
Yeah.
going short.
no, go
Um,
long. Go long,
Perry?
like on a couple calls.
Just buy some shit calls and see what happens.
Yeah, just shit calls.
I-
It bounces.
why stop there? Let's just start doing 0-day spy contracts.
Hold on.
Let's
Let me
go.
let me look at an options chain. What is a 30 strike?
Yeah, I was gonna say that. Tell me what the vol is, because the vol has to be massive right now compared to where it was in the past.
Yeah, but if your vol is massive, but your stock dropped 50%, I'm pretty sure the calls aren't going to be super expensive. Let's see, a 30 strike call. The midpoint's like, well, let's see. Bid is 5 cents. Ask is $1.15. Last sold was 15 cents.
Oh,
Yeah,
Even
you're
the
saying
20
there's a
30
chance.
strike though.
Oh, I know. That's a total shit call.
yeah, that
Yeah.
is what you call it. It's just you're asking for Delta to do a lot of heavy lifting.
Yeah.
So, but GE,
What about GE?
interesting right? Now that all the riffraff is gone.
It is. It's one that Yeah.
I'm trying to figure out what I want to buy GE Aerospace at right now.
Yeah.
And I'm trying to figure out too if I want to long term or speculate on it. So I'm I don't know right now. I like it from a overhead perspective so far.
Mhm.
I really like the aerospace company.
It's a way to play Boeing without Boeing.
I know that's the one part.
Yes.
I'm well aware of. Yeah, we did a video on it. It's like the travel thesis is so strong. You know, it's just like, can Boeing get off their freaking ass? And like, I don't know. There's a lot of moving pieces to this, but it's very intriguing to me.
Yeah.
I was going to take tomorrow to look at like their military, what they actually do for the military, because I haven't really spent much time. I've been more looking at their jet division, what kind of engines they build. But GE Aerospace has the newer engines, which are supposed to be lower emission, right? So they're going to get a lot of business, and they seem to be a leader in that industry, in that business, where they're more efficient engines, so less pollution, more fuel efficient. So you could see it's like the new engines that they're going to sell to Boeing, which they're the primary supplier, and then I think they'll have retrofits, and then obviously Bacon and me looked on their presentation. The thing that caught our eye was the same thing that caught my eye with Curtiss-Wright, the service revenue.
Yes. Yep.
So as they start putting these new engines into service with different airlines, the service revenue they're estimating like huge gains in that, which is the same idea as Curtiss-Wright was basically.
Yeah. They the service revenue, they broke it out into phases, where it was like initial phase, installation, and very early maintenance, which they put like 25% on. The middle 2 and 3 phases, which was like roughly 20-ish% for each, and the last phase of it's a really old engine, that's the remaining like 25-ish%. So it's like a relatively even spread throughout the life cycle of the engine while you're generating service revenue. But just food for thought as far as like the pathway of that income stream or revenue stream.
And you know what seemed like was a super obvious buy back in October in this space, and it's probably going to rally Monday. Raytheon.
No.
Speaking of Kurt, yeah, because
I thought that was a great, man, that turned out to be great for people.
Yeah.
Yeah, it's. I mean, you get everything right there. You get missiles, you get engines, all under one roof. Pretty good. Pretty good. Likely, if given this craze, Bill Ackman freaking out on Twitter, you're gonna get some 5% rally on Raytheon on Monday. Everyone's rushing to it. I know Andrew bought calls, so
On which one?
Raytheon.
Oh yeah,
Snuck in my second gaslight for the live stream.
It's
now
my
back to when I
Raytheon.
sold it. I sold it at $100. Now it's back there finally. So
Man, damn, you could have bought it right back at 70.
I mean, like
funny.
you paid at $70. You were paying the unknown of whether there'd be more problems with those. Was the flaking of the paint and the metal? So, I mean, we haven't heard anything new, so it worked out well so far. And you're getting all the revenue. Hopefully, if a Ukrainian budget comes out, it actually, you could get some more return on Raytheon if they get like another $40 billion Ukraine bill.
That's right.
Thanks, Dex.
That was after I short ladder attacked Perion, but yes.
Next time we talk about a short idea, I'm literally gonna do the quote and be like, "How certain are you?"
Oh dear God.
I'm not uncertain.
Isn't the show defunct? Or it's now done? Yeah.
Yeah. Also, it's funny because the question, how certain are you? I'm not uncertain. I don't know this, but I'm pretty sure in the show he says that when he literally has insider information and
yes.
personally messed with something to make it happen.
Yeah, he doesn't want to ask directly. He's just like, "How
Right.
certain are you?"
Yeah.
I'm not uncertain.
Because for example, in that one, didn't he go to the factory and actually see all the inventory pile up or something?
Yeah, he paid one of the managers to open it up for him so he could see.
And isn't there another one then where he takes a sick chicken and
Oh no, he's not that far. He's not that far in.
Not that
Don't
far
spoil
yet.
it. Don't spoil it. Yeah.
Okay, never mind.
Yeah, but yeah, shout out Chicken Bill.
Chicken. Anyways, I am not uncertain. Yeah, next time I would say, "How certain are you?" I am not uncertain.
So, does Raytheon directly compete now with General Electric and vice versa? And fully the Curtis Wright, GE. I saw that the service business. Yeah, you're right. That's what's expected to really grow, and they do it for the military. They do it for everyone.
Yeah.
So
Raytheon does military, the F-35, Pratt and Whitney, Pratt and Whitney within RTX. I got to look more into it tomorrow. Exactly what I'm thinking that GE does the helicopter engines primarily. I'm not totally sure yet. So I think Pratt and Whitney might do more of the fighter engines.
Okay. Also, Andrew, by the way, side note, I would like to have a conversation with you if you're free on Discord, wherever all the club members can see, on a certain company that I might be buying on Monday, and I want to hear your take on it. My money is on the line, so I need other opinions.
Are you incentivizing people to join it?
No. This is before I forget them.
Am I invested in this company?
Adjacent. You are adjacently invested in this.
Okay.
Not directly.
Okay, I was right. A lot of helicopters.
Yep.
A lot of helicopters with GE Aerospace.
Yeah, and they're
now.
Still...
This doesn't mean it's permanent.
No, certainly not. Yeah, and they're also
there's nothing confirming Pratt and Whitney doesn't have to always be. And apparently, I know this. I've looked at Lockheed Martin does not particularly like Pratt and Whitney, and I think they would love to take over that business with the F-35s.
Yeah,
they don't like that Pratt and Whitney provides the engines. So,
I think what we witnessed was nothing short of excellency with General Electric. I regret wholly and totally listening to that one, what do you want to call him? Whistleblower
Oh yeah.
scaring me off. Oh my God. The returns
When did they spin
that
off?
you would have made,
Mhm.
Which spinoff, Andrew?
all
Well-
of them. If you include all of them, your returns
Yeah.
are ridiculous.
Yeah.
Not like NVIDIA levels, but like for an industrial. We're talking about
hmm
Was this?
Can you
was this
imagine,
22
Fabio?
they started spinning off?
Some Gen X or some millennial got a inherited portfolio from their retired GE engineer dad of like tens of thousands of shares, and they just sold it right away, like 2018, 19, let's say.
Oof.
Can you imagine
Oof.
like the loss. Oh God. Maybe one of them's watching.
Culp literally just, ingrained himself in he was already known, but he's now ingrained in greatness. Like he's the guy that turned around GE.
Yep.
Think about like that guy in Maslow's hierarchy of needs. He's got everything established. He's literally just going for a reputation, and he's got that in spades now. Like this guy walks and now will have like the ground worshipped behind him.
No, really, like I live right near GE's headquarters, right? Like it's important to my area in Schenectady, and like it's amazing what he did. He saved this American company, like from what it seems like, and it was the right thing to do, and split it up. So now we can see, like Japan is trying to push this kind of idea now, actually, because Bacon and Me did it like I think 2 months ago. South Korea and Japan are kind of trying to get companies to start looking this way about earnings per share and value, profitability with these huge conglomerates. So you can see kind of their wheels like, okay, maybe this is why we've lagged a bit. We need to have these massive conglomerates break apart into more productive units. That's why there's some hope, I know, with some people with Japan and South Korea and so forth.
Yep. Yeah, it's I gotta say, he also spun it off in a way that the public perception really likes it.
Yes,
because-
their explanations to the public of what they were doing, I honestly top notch. The way they did this and rolled it out, I think it was way better than what 3M did with their weird healthcare spinoff. Yeah, GE did a much better job with the marketing.
Yeah, yeah, because he got himself chairman seat on GE Healthcare. I think the GE Aerospace shareholders like got some GE Healthcare shares. GE or Vernova, he's like, nope, don't want a seat. No, we GE like original shareholders aren't getting anything out of this. GE Energy, like Vernova, you're on your own. Which I guess shame on me for being interested, but curiosity. I am I'm a curious person. Yeah, and GE Aerospace is just like, yeah, here we are.
But I love just the high tech. I don't know. I love the business GE Aerospace is in. That's always been the piece of GE I wanted. As long as I've looked at GE, I've always wanted that piece of it. The freaking but I didn't want the whole thing. So
Now you have it. I mean, I'm not interested in GE Healthcare, by the way, Bacon. I've looked a little bit deeper into it. It looks like some of the
it's too lofty.
Yeah,
valuations. That's why I wanted below IPO and like
they make really good products, though, don't they?
They do. It's just that like while they were in that conglomerate, they've had to cede top position for like, say for example, handheld scanning devices. So now they're like 2 or 3 dog in certain devices where other people have been able to just like singular focus go, and they still have market share, but we'll see if there's any other developments going forward.
Yeah, I just know like I was at a hospital because I had to get some my legs looked at, and they were like all excited, like, oh, we have this new GE machine. I was like, interesting, GE Healthcare. That's all I was thinking about when that was going on. So that's what I was just asking. It seems like their products are good. I don't know.
Yeah, it's not that they're bad. It's just lofty valuation.
GE had a lot of good businesses in it, and Culp saw that and was like, we gotta just get these
Be free.
guys operating on their own. Yeah, to really unlock the value. By the way, GE Appliances was owned by someone else.
Yeah,
So-
yeah. GE Appliances. It's some PE that they did.
That was spun off years ago, I think.
Yeah, years ago.
I don't know why it's still called GE though.
The naming rights. They PE wanted that, and they thought there was value for that, so they have however many years or decades. So it's fine. It is what it is.
Peace out, Whirlpool. They're out of the S&P 500.
Oh yeah, WHR. Let's see how their price has reacted.
To what?
Who replaced them? Uber? Was that I think that Uber
Yeah.
booted them out.
Hey.
Yeah. At some point, do you think WHR gets interesting? Like this thing is beaten down.
I don't know. I just think this is like reaffirming my thesis of you just buy any company that gets S&P 500 inclusion and short the company that gets the S&P 500 disinclusion. Easy alpha.
Yes.
All about the flows.
Andrew has turned to the dark side. You don't know the power.
What is there?
Oh, is he actually? All right. Well.
Oh,
Come on, really?
I don't.
Yeah.
Have you seen? So Lufufu bought Nike before earnings got blasted. He
Wait,
bought SoFi after
wait.
earnings got.
This can't be
blasted.
right, Dan. This can't be right, Dan.
wait,
PE
wait.
ratio of 19 on GE.
Mm-hmm.
Wait, that doesn't.
Why are you not buying this?
Oh, that is it.
I haven't finished looking at it.
Oh,
but
no. Why are you not buying this?
You think it's
this business will trade for a premium.
Yeah, I know. I'll figure it out
Mark my
tomorrow.
words. We'll do a bet.
Wait. Can we,
Gentleman's bet.
Because I got my Disney money, so that's kind of where I'm thinking I'm gonna use it for this. But
Yeah, I have freed up cash.
That's not financial advice.
Can we back up? Jeremy, isn't he short home builders?
Look, if you
So what
don't think, because then you're not operating on the same plane.
Okay.
Just accept low PE.
So here's the
Good.
thing.
He
Michael,
has the brand in his laundry room.
here. Michael Zhang has many Whirlpool appliances, but he doesn't have their fans. So we need more DD there.
Is it that or is it not?
I know. Yeah, that's beautiful. Very poor choice of words.
grammars and grammar people.
That's good. That's good.
Yeah.
Their fans are quiet, I hear though. So.
Yeah, you
Wait,
guys
how do you have a house
lights
without a
and-
fan
yeah.
in sight? That's kind of odd. I have like 10 fans somewhere.
Maybe he's just got central AC. I don't know. Maybe.
You guys would have Dyson fans? The ones that you
I've
can
seen
your
it.
hand through?
That
Fucking
facial
weird.
expression.
Dyson.
Kiwi Sam?
Oh, those fans. Those are cool.
Yeah, that you just have them as like home decor, but they're also a fan. That's
And
the
air
point of
purifier.
having it, by the way. You don't put those away, you leave them out as home decor, and then boom, you get heat and you get cooling. It's pretty cool.
Air purifier if you shell out the cash.
Yeah, I should probably get one and just put it right here. So it's just like here and just blowing at me, just like
Okay, there was a company. Okay, funny enough,
strange.
like a year ago, I almost proposed to you guys to buy Shark Ninja,
Bearish.
and it actually would have worked out really well. I really liked it, but
What was it? Shark
Ninja.
Shark Ninja.
So Ninja
What?
Appliances.
Oh yeah.
It's
I've
done-
seen them. I've seen them around.
It's actually done really well.
They have
I
really-
looked at it. I think summer of 23. I looked at it, or fall.
oh my
And
goodness.
it's done well. So
Yeah, no, actually,
I think it's a good it's a good niche
It-
business. I
Is
think
that
they
the
have.
Ninja blenders? Is that like the
Yeah,
blender?
the Ninja products and the Shark products. I'm not remember. There's like two different lines of stuff, but I'm like this is a nice little niche business. I could double in like 5 years. I
yeah,
thought.
because actually this company was part of the reason why I wasn't bullish on iRobot from a fundamental business. Yeah, because I'm like,
Shark.
yeah. They also have their own little robotic vacuum cleaner. But,
This
And
company
I like I don't know. I like I have a lot of Ninja products. I really like them. And
you know what's a comparable to this company? Maybe a company many of you the audience speaking may not have ever heard of it, but it's a similar style. And oh gosh, Helen of Troy.
Oh, that one. Oof.
It's Helle. Now they got a little ahead of themselves, in my opinion, on some of their acquisitions. Like they started buying Salon, like Dry Bar. They bought Dry Bar, but they're the same thing as Shark Ninja. Not the same thing. They're the same kind of comparable business, but focused on women products.
Yeah. It's
So-
Mark Hodes was short this thing. I don't know if he still is or isn't, but take that for what it's worth.
They have some decent projects. One of their products has been probably getting killed as Hydro Flask, but
Oof.
because Hydro Flask was like the Stanley bottle before the Stanley, and then Stanley took over that.
Yeah, literally look at the returns and then suddenly bow.
Yeah.
Guys, investing's not hard. You just buy this in 2010 and you just sell it in 2020. What's so hard about this stuff?
Just win.
Look, the rumor mill has started. Look, it just gets better. I'm reading this. It's so funny.
Wait.
Instead of that, wait. He pulled himself out of darkness.
This is where it begins. This is where it begins. Always seems to be handling sobriety well. Evidence its development. I'm gonna stop drinking alcohol.
Well, guys, Fabio's retired. He said he would retire when Meta was.
Fabio,
you guys are also
lost purpose in his life after Meta skyrocketed.
He goes to Aruba every 2 weeks. He's just doing whatever he wants now.
You're also missing this other side combo that's amazing. Look at this one.
Yeah.
And it goes strange flex. It's my most prized possession. They're having a conversation while everyone is having a conversation. It is. I knew it.
I like
have some closure.
He said, "I'll have some clean clothes for sure."
Live chat is undefeated.
It's like two different conversations.
Is
There's like
Lufufu
there's
really?
actually like 4. We have like the
There's like 4 or 5.
Wait, I gotta find this. Is he really?
Oh man. Okay. So Helen of Troy.
Yeah.
Another kind of comparable. But Dan, I don't know why you're not buying GE, man.
I'll figure it out tomorrow, I think.
Yay.
I gotta record my new video though. Fucking too much.
There's like a list of like 3 or 4 businesses I want to buy.
I want to buy Carrier. I want to double my Carrier position if it dipped under 50 again. But
I want to buy a YouTube channel.
how much you want to pay me?
Oh, oof. Never
I'll
mind.
tell you my channel. How much?
You're too rich. You're too rich, Dan. I can't afford you.
Make me an offer. Dude, I don't give a fuck about the channel. Dude, I made like, you know how much money I've made this shit? I don't care about my, oh no, not my $50 of ad revenue a month. Oh my God. What will I ever do without it?
Yeah,
So.
but you're telling me how you're just trying to get it up so you can sell the 10x course and cash out.
Yeah. We got to get to
By
that
the way,
10x. We haven't gotten there yet.
I am still waiting on my McDonald's course, and I still haven't gotten it. As a subscriber, I'm very upset.
Oh. Damn it. We'll have a members only meeting, just Andrew and me.
And I said, "They're so." As the money, I want to know.
He's got me for 2 hours. I'm like, God.
Oh man.
All right.
I will say, like, Micron almost made me, actually it's close. Micron almost made me as much as Perion. They're like neck and neck.
Yeah.
You bought calls on Micron.
Yeah, so both of them did, both Micron and Perion. I made about 12 grand on each. So I'm pretty good this year. I'm like retired from trading.
I think I need to also retire because I'm 3 for 3 this year as well. Because I had sphere calls, hood calls, Perry puts.
I also shorted Nike on earnings from 100 to 90. So,
oh, you heard Jeremy was long, and you're like, easy top.
Oh my, yeah, no, really. When Jeremy, that confirmed it for me. Jeremy could not have been like, I don't understand why Jeremy was bullish on Nike before earnings. I'm like, are you smoking crack at $100?
No, you didn't hear?
You know what's coming with Nike and China and what's going on right now.
It's because Nike works harder than anyone else.
Wait, you said you know, as in he knows? He doesn't know.
He just throws darts at a wall and he hopes like 2 or 3 out of 40 hit, and then he'll just brag about those, and he sells 10,000 memberships. And
You have to understand, this is Jeremy's like, this is how Jeremy makes a stream. Here, I'm going to present real quick if you guys don't mind.
Go for it.
Fire away.
So he just sits in like MS Paint. He's like, okay, so stock 1.
Oh, this is exactly in the exact handwriting too.
It sadly is.
He's like,
yeah.
You got to misspell
It's-
stock though. He forgot a C sometimes. You know?
yeah. Actually, we'll just say it's like, yeah, we'll say that.
Throw a C in there.
He's
Throw a
really
C
good.
at me.
We'll say like, it's down, but they work hard. And then
work is with a U, not an O. Work.
that's supposed to be a no, but don't worry, it's Jeremy anyways.
Yeah.
Hard. Arrow. Oh, have
Big
you
dollar
noticed-
sign. You forgot big and put
Oh.
like big dollar sign.
dollar sign, and then over here I'll be like, buy the dip, don't trip. So that's it. But did you see, by the way, he stopped showing his 1-year returns?
I wonder why.
Now he's only, what he'll do is he'll go through a screenshot of like Elf, Tesla, and Meta returns, and that's it. All time, obviously.
Amazing how he stopped that.
He'll mention Amazon too, but
The VT tracker.
I have a technical analysis Tesla person we can watch if you want. So,
Oh yes,
okay, hold
I
on.
was going to bring this gentleman up because it was shared recently. I have no idea who this person is, but this was shared. This is someone who's long Perry. I don't think we should cover this person. I was gonna.
I put it in the
Aw,
group
no,
chat.
this guy just looks like a simple. Like,
Oh, yeah, poor guy. Saw that.
This guy. Wait. Oh,
He has a big stake in
Wrong thing.
Perry. He did not do well.
Oh
I
no.
mean, like to be fair, like I just think that the Perry situation was more like people think like it's like peak everything moneyism.
Go
Is
go
this
to
a girl.
go to the technical analysis, the second section. That's where it gets good.
Sorry to
I
sound like a boomer. That was like the most boomer thing I said today. Like, is this a girl? What the hell is even that?
So go to like
I can't be canceled. You can't.
like 50 seconds or so.
50 seconds. All right.
Yeah. This one part, the TA part, is really funny.
1 hour chart.
Oh, it is.
The plan
Okay.
here is to show you guys the different indicators that we're going to use in order to see what's happening at this current moment. Currently, we have multiple harmonic detections that are peaking up here. We have a cipher and 2 shark patterns, which are right about 72% of the time. So this is not something that's highly accurate on Tesla specifically
Thanks,
or
Dan.
in the recent time, but
Wait.
it's still something that we need to take into account. If we move out to the daily
Wait,
chart,
pause,
this is why I
pause.
like
Marcel, if you do that again, I'm gonna have to ban you from the channel. You can't misgender. Thank you.
to do is look at multiple time frames here. You're going to see the same exact setup.
I hope people
Now,
are
this
writing
time
these
we only
terms
have one
down.
cipher,
So
and traditionally this
Cipher.
is about 75% accurate. These harmonic patterns show up in the market when we are either hitting an absolute top or an absolute bottom. And so you can
Wait,
see on the
so
daily chart,
pause.
which is a
Okay,
very
so like-
strong
It's a harmonic pattern. Does that mean like you have to like go play a piano to figure it out? Because it's harmonic. And so you go, oh, okay, now. So
don't mess with his cipher pattern after the harmonics. Then
His?
lead to shark bites.
His?
Or shark.
Shark attacks.
All right.
Oh, no.
I had to take action. That was.
Oh, no.
I feel
why'd
good
you-
about myself today.
Why'd you kill Dan?
Because we're on Google's website. We have to be very careful about how we gender.
Land shark.
Dan misstepped once.
What did I say?
You said his.
Oh, okay.
We don't know. We don't know. It's ambiguous. You have to keep your language ambiguous. Slurpees, that's your warning.
So shocking to people. So he bought $10,000 of call options on Tesla before it dropped
Hey,
recently.
Dan,
It's
probably
down to
just
like
give you more.
2,700. He said
Wait.
This
Hey,
person.
hey.
this person
Thank you. All right.
he
sorry.
got wrecked on this. So
Oh my
damn it. This is so. I don't live in this era. I
So
can't say-
demonetized. Change his name to Boomer Dan. All right.
I hate you all. I hate you all.
All right. What did the person do?
The person.
They bought calls?
Yeah,
Okay.
before the wreckage of Tesla recently. So,
Okay.
10 grand became like 25 or 2,700.
I didn't even check the date.
We might want to remove the victory lap time now because it looks like we're ducking on this individual.
Let's remove that. Yeah, we're not.
Sometimes just avoiding bad decisions is also a win.
I believe this was right. Wasn't this Bacon the day before they announced deliveries were a train wreck? Right now, I'm right. This was like a day or two before the delivery numbers came out.
Yes.
And he doesn't mention delivery because why would he? Or why would this person talk about delivery numbers? Because it's all about Shark and harmonics. So it's all that matters.
I thought they were re-educating Dan. This is very good.
Yeah.
We're re-educating India.
So investing is not about looking at a company and who runs it. It's about harmonics. It's right there.
I feel like
we also have a cipher pattern that's in play.
Yeah.
Now, at this moment, too, you might be thinking to yourself, well, what makes...
No, what they're saying doesn't matter. Like,
I was going to say, I feel like people that are actual TA traders would just look at this and be like, this is ludicrous. Like, I wonder where they even got these patterns from. Yeah.
I mean, this is YouTube Finance, good sir. All you need is Robinhood, Webull, and TradingView.
They have quite a number of subscribers. Wow.
Yeah.
Thank you, Andrew. Very proud of you.
Land truck.
Well, if you saw my
ETF FaceTime, that's your final warning. I'm watching chat. Listen,
I love that behind the scenes, the Discord mods that say final warning. It's infected you, Fabio.
technically I'm like the asshole Discord mod of our community. So
He's dad. I get blamed for some of your. You're the dad of the group, not me.
and I can tell you how many times I have to time out biotechs for making fun of me. That's the only person I abuse my mod powers on.
I just like chaos. The only thing I hate is anime. Other than that, I enjoy the chaos. So.
Oh, we can talk about this. So Jesse's not here, and he's our foremost expert on Arista.
Yep.
So we're going to be sharing like a subpar opinion on this.
No,
I love how loaded that question was. You see a summary by some stupid analyst. Yeah, screw that guy.
Fighting pandas.
Well, first, before we go there, I do want to see what remind myself what the Tesla destruction when this person did it April 1st.
Well, it recovered. Yeah. It's like just been flat. If anything, they've probably had theta decay, right?
Did they say exactly what contracts they bought?
I don't think so.
Probably not.
About 10,000 what?
Just call options.
Let me get the transcript.
No analysis like technical analysis.
He thought they were going to say expiration date.
Yeah.
Yep.
No, it's at the very beginning.
Yeah, I guess so. Maybe.
No. Oh.
Bless you? Question mark?
It
doesn't count. This was an April Fool's
Such
Day.
a close expiration date.
Ooh.
Around 30 seconds.
Just watch from like the
price of $11.90.
Right here.
Nope.
There
I
we
got
go.
it. I can't see
May
it.
17th.
Yeah, May 17.
What's the strike? 175. Ooh, you bought in the money, then they went out. That sucks.
Yikes.
Eesh, watch them be completely right, and it just suddenly goes.
Well, I mean, really, this is an earnings play at this point. I feel like Tesla's going to go one because, like, Tesla, I feel like is a stock that's kind of just holding on to hope. But yeah, let's talk about Arista.
I finally actually be nibbling a little bit more, but not buying too much more. That's where I'm at. So I would be buying. I will be buying, actually. Not would be. Will be buying. This is not one of the companies that I'm discussing though, Andrew, because the one that I need to talk to you about, very important.
Wow, so plenty of opportunities. Market is
So with Arista, do we want to talk about just like what the analyst said and what my takeaway was?
Yeah, let's talk about the analysts, what they said, and then
So basically, okay, and I always get them mixed up. Does NVIDIA use InfiniBand or Ethernet? They use InfiniBand, and we're going to Ethernet, right?
think so? Question mark.
Yeah. So NVIDIA has a monopoly on InfiniBand, right? Which is, I guess, the networking that like the structure for these data centers, or part of it. And Arista is moving in on Ethernet. Ethernet is going to take over InfiniBand, is what this one analyst said. But they said they think NVIDIA is going to still have a monopoly in Ethernet, which Prisley, Jesse, and I all said that's a stupid, idiotic take.
Repeat that one more time. Emphasize on it.
So, like, definitely Jesse and Prisley have a better understanding of this stuff than me.
Uh-huh.
My understanding is like part of the networking infrastructure is right now it's InfiniBand, which I want to say it's how part of the structure to connect it, like the different GPUs throughout the data center. But basically, and we've talked about this, right? How like Meta, AMD, all these guys, they're on like the Ethernet, like let's move to Ethernet group. Did you see that thing that like Jesse shared?
Yes.
Let me see if I can find. Yeah, Meta Platforms is trying to make Ethernet work for AI. Yeah, so basically, the sell side analyst said that they see these data centers moving to Ethernet from InfiniBand, but they think that NVIDIA, who currently has a monopoly on InfiniBand, but from everything I've heard from Jesse and Prisley, is that no one's going to have a monopoly in Ethernet, and this analyst was saying that what's their name? NVIDIA will have a monopoly on Ethernet, which would just have some impact to maybe some of the like terminal value of Arista's cash flows. And then also like the CEO sold some stock, but it was such a pathetically small amount. Doesn't matter. They own like 2.5 billion, and they sold $1 million worth. So $2.5 billion worth, and they sold $1 million. It's literally nothing. But all I think that happened, the reason it went down so much, was the whole market was already down like 2%. If you add like that additional pressure from a sell side downgrade, I think this is what caused it. Because someone else just upgraded them the day before. I think it was JP Morgan. So like,
so everyone's paying attention to the downgrade, but not.
I just think the downgrade happened on a day when the market was down, and like maybe a mathematician can explain this better, but like you already have like market wide sell off kind of indiscriminately, and then you add like the sell side sell off pressure as well, and then potentially the CEO selling pressure as well. I think it was more of a dislocation potentially, but yeah, from my understanding, the actual, because I talked to Prisley and Jesse about it briefly, and yeah, so from what I understand, it's not that big of a deal, and they kind of fundamentally disagree with the take this analyst had.
Yeah. So buying opportunity in some way.
Potentially.
Potentially.
Yeah. Because some people could make an argument that if you think AI and data centers is in a bubble, regardless, you wouldn't buy Arista. I'm just saying you can make that argument.
There's someone, yeah. And
Yeah.
and honestly, looking at the war games that we played the other day in the portfolio, I think I'm very well, like, for that scenario playing out, I'm okay. So I think the risk that I have allocated certain names, I think I can still come out on top in both ways play out. Where it makes me very happy. I can sleep well at night. So
but does this thing have a cipher and shark pattern?
Cipher and shark pattern. What is going on? So about
Wait, we need like I need to get like a shark fin, and then when we mention this, I'll just like go look around the screen.
I now I know this. ET FaceTime home. You are now the washing machine guy. God, I love my washing machine. I'm really happy that you love that.
He's just like he's in his lunchroom, just kind of like stroking it right now.
To be fair, like for
as
homeowners,
it vibrates when it's on, he's like, yeah.
No, like to be fair, maybe this is anecdotal, but like I've heard a lot of like appliance owners say like, yeah, my appliance is like decades old. They don't make them like they used to, and maybe there's some merit to it.
I don't know if we care. I bought commercial grade Speed Queen washer and dryer. So yeah, well, my wife demanded them, so they're all steel. There's no electronics in it, so it's all analog. But
interesting.
It's the way to go.
Is that like a? So that's
they're like a Wisconsin or Minnesota company, I think. But
he doesn't go.
Yeah, like they make no frills commercial. Like everything's metal. There's no circuit board in it. It's got the old dials like you're used to. That they're real dials. They're not just an electronic fake button. But
so less things can break.
Yeah. Well, one thing broke finally. We've owned them for like 15 years. A belt broke. I just paid like $300. So
that's the way to go. How much is the initial cost or investment?
I think they were 12 and 800 originally.
That's not bad at all.
No. But
yeah, adulting, you start talking about washer dryer appliances. Jesus Christ. Me of like 7 years ago, I'd be like, what the fuck is wrong with
you? I showed you guys my dragon. I'm really excited about my dragon pergola. That was my favorite.
Oh yeah, that looked really good, really cool.
I
hand drew that dragon pattern was me. I drew that.
Oh,
it took me like 5 tries to draw it onto a piece of plywood. But
wait, are those I'm just googling. Are those the things that I always look at where I'm like, it looks like a place to go outside, except if it rains, the point of having a roof is completely lost.
Yeah, it's just for sunshade, basically.
Yeah. Okay. That's what they're.
Although
for.
you can put a screen over top of the wood, so it kind of actually deflects rain if you do that too.
Okay.
Yeah.
Okay.
So some people do that. Yeah, it's usually 2 layers of wood, right? It's like 2 layers, but
yeah, there are preventative measures that you can take. Like a large tarp should not cost that much. That may be tacky, but.
All right,
that'll be my carpentry channel, right?
We have one final question that we'll do. Palo Alto.
Oh,
goes off at 2 hours.
Everyone's pal, Palo Alto.
I bet you wish you got out on the Pelosi pump like I did.
Oh.
I jokingly pinned a comment in general chat because someone's like, it's going down lower. And I was like, I'm pinning this because it's the bottom. I think it has been the bottom since I pinned it.
I think it's an interesting company, though.
Yeah, it certainly is.
I think I would buy this over Arista. Sorry, Jesse. I think if I had to pick one.
I mean, this has probably for all of us, or not for all of us. I'm not going to speak for everyone, but I'll say me and Dan, because I don't want to because Dan, you revealed your idea or you revealed how you're thinking about this. I think that Palo Alto is a little bit easier to understand how they are easily going to scale and dominate. And we can understand and get behind that cybersecurity has room to run for a very long time. Arista is a lot more technical.
Mm-hmm.
Yeah.
Although I can understand how it's explained to me. I can see why a SaaS-based business like Palo Alto is very attractive. Firewall, endpoint solutions, the whole shebang. They offer it. But Andrew wants to kind of express why he's short, so we'll kind of
Palo Alto?
Yeah.
Because I don't like California.
That was my third gaslight of the stream. So, all right.
I'm long. So,
Why are you long? Let's kind of explore this.
So if I almost just want to pull up the thing I wrote about them the other day in the investing channel and just kind of read through it because I was trying to explain to someone.
So help me kind of walk through some of the assumptions here, because I got my little handy dandy.
Okay, I'm just gonna. Is it okay if I share my screen because it might just be easier to read through what I just wrote out the other day.
Yeah, of course. Go ahead.
And I'm trying to show you what happens in our wonderful community and all the awesome discussion we have.
Uh-oh.
I almost sounded sarcastic. I can't.
No. And I can't enlarge this, can
I? If you were on the web version, you could, but I don't think you can there.
Not unlike the.
Okay.
So someone was asking me like what CAGR I have as terms of growth for Palo Alto, and I just said like let's just take a step back and talk about them.
Mm-hmm.
And so it kind of steps back and says if you're investing in anything in cyber, you need to have a real opinion on what is actually happening with cybersecurity, where the cybersecurity industry is going, what's going to happen to spend on cybersecurity. Is it going to continue? Let's say you're just like, yeah, I think like cybersecurity is cool, but I don't think that anyone's going to increase their spend. I think generally maybe it'll grow at the rate of like GDP or inflation. Don't buy cyber. You're going to lose your ass if you're right. So what I lay out is like, I think we're in a mega trend and we're going to be in a mega trend for quite some time. One is because of the new SEC regulations on disclosures on breaches, and I have to do it within 3 days or something like that. And then if you look around, just in the last year, didn't United Health get hacked? MGM got hacked.
Yes.
Microsoft got hacked. And so my point is that I think there's going to be a long, basically reinvestment runway for these guys. Yeah, and so the only small signal I've seen is I've seen somewhat, and I haven't got the final quotes, but for my company, but I've seen somewhat of a moderation in cybersecurity insurance rates, but that is not a signal I'm looking too much into because I think a lot of that's coming from the insurance company is requiring you to do things they didn't require you to do before, that a lot of companies weren't doing. That's reducing risk. But anyways, so I think that cybersecurity for many years is going to have just increased spend for a while. Palo Alto is at an interesting point in the company because on their last earnings call, it remains to be seen if they messed up the phrasing or if they meant what they said and now they're just trying to save face. Because what they said was, we are seeing an exhaustion or we're seeing fatigue in cyber spend. Obviously, you say that you're a growth company and you're saying we're seeing people not want to spend money on our product and you're priced like a growth company, you're going to take a haircut. So they came out later and said no, we see people are saying there's fatigue in spending on other platforms, not ours. Let's see what's true. So if you pull up, and let me just pull this up here, Palo Alto, they're trading at what I would say is a cheap multiple for where they're at.
Very nice, Dan.
Hold on. So you're looking here at a company trading in the cyber industry, trading at under 30 times forward free cash flow. And I think this
forward for what year? Sorry. for
like next
2026?
next 12 months. So it would be like the first quarter of 2025 and then the rest of 2024.
What is the guide for growth beyond that? Like,
So
what percentage?
it's like mid-teens. So they have it going like top line is mid-teens, re-accelerating the back half of this decade, which is like I wouldn't care much past like maybe the 2026 estimates, and even that I'd be a little for
That
sell
makes
side.
sense. Yeah, I'm aware
Um,
of your
and
style.
and I think they have margins kind of being stable. I think they'll increase, but so like if you're growing bottom line, obviously EPS, like don't even worry about that right now because their EPS numbers are going to just inflect because they're not really optimizing it now. But if you're going mid to high teens and I think that number may be low. So I think that number has a lot of conservatism built in because of the recent earnings calls and commentary that management kind of gave. So anyways, I going back to the product real quick.
Yes.
They are the most diversified within cyber. If you look at their product offerings, and there's a good and bad to this. So in my opinion, they are far and away the best in firewall. I don't think you have Fortinet, who I've used and I think gets a lot more vulnerabilities. Like there's been several times, if you when we had a Fortinet firewall, like my cyber guy, he'd call me on like a Monday and be like, dude, you need to download this update stat. There's a vulnerability found in the Fortinet firewall. Like you just never want to hear that. So I haven't had that issue with any Palo Alto ones. But they do endpoint, they do midpoint, they do everything. They do firewall. Look at these solutions. They do SASE, which is what they're saying about zero trust network access. So they do a bunch of stuff. SWAM, which is part of SASE, basically. Data center. So they're the most diversified. So when you're buying Palo Alto, you're saying it's a really good product.
Yes.
They're the most diversified. If I think cyber spend is going to just continue at this massive growth for the next 10 years, it makes sense to buy them at this multiple. I don't know what multiple you could have picked them up at like a year ago. So when I was buying another company, it's probably right around. So they're trading at a higher free cash flow yield, but anyways, the reason I'm looking at this is I'm a CrowdStrike holder, and I think CrowdStrike is far and away the best operator in the space. It's not even close. If you bought them when I was back in this area, you did very, very well for yourself. Obviously, they've had multiple expansion, but anyways. So the point is, I am very bullish on the mega trend that is cybersecurity. I think right now at current multiples, like look at the free cash flow yield difference right here between Palo Alto and CrowdStrike. I think that is what makes them interesting. Essentially, is that like you're getting CrowdStrike for basically half the valuation, and I think that they're a strong player, and I think they might have a temporary blip with their packaging kind of change. If they pull it off, by the way, and they actually platform and make everything more cohesive, because that's been kind of the issue, they could do really, really well. So it's a smaller position for me. It's like 3%. So what are your thoughts?
So I free thought completely into this.
I'll just put my thing back up. Free thought.
I did not.
So yeah, I think that getting behind the cybersecurity thesis is not too difficult for someone to kind of just wrap their heads around. Okay, generally speaking, the broader theme, it has legs for the foreseeable future. And then really looking at what subject matter experts say who work in this space, the opinions are pretty much all aligned, with a couple of them being the high quality best of breed players that being Palo Alto and CrowdStrike. And then you outlaid it perfectly. Well, if you're looking at the best of breed right now, CrowdStrike, the best in endpoint security, they trade at a really lofty premium, deservedly so. And then you got Palo Alto, which does also trade at a premium relative to peers, also deservedly so, but not that much. But at the same time, with Palo Alto, you get the full suite of products. You get endpoint, firewall, midpoint, etc., everything. And so you get something that probably has multiple avenues, multiple levers to pull. And depending on how the market's doing for a particular product, they're going to be involved in that. If we looked at the results, we saw that, well, yes, firewall slowed down, endpoint did really well. So putting it all together, you get a holistic picture. It didn't look too well because firewall's down. Also, this ambiguity on what they're doing with this two platform. But when you really break it down, it makes a lot of sense. The analysts didn't like it. CrowdStrike comes out, makes fun of them, but really, when you break it down, it's not really deserved, because CrowdStrike is strictly endpoint, and of course, their product offering, their avenue of sales is simple. Their way to offer the product is simpler, but they focus on one thing. They don't do firewall. Palo Alto, on the other hand, offers a bunch of other services that CrowdStrike isn't really involved in just yet. And so I like the general premise of what we're getting with Palo Alto is a company that does it all, does them all very well. It's not the best in endpoint, but it's still going to win. It's still going to win business. There's room for a lot of these players to grow still. And you didn't talk about Zscaler, but you have talked about Zscaler in the past. And I think we're going to get more, I guess, discussion from you on Zscaler in the future, because you're still kind of looking into that one on SMB. But
yeah, everyone that I talk to like comes to the same conclusion that I do, and like I need to look into it more, because there's got to be some. When I hear them talk, I always go like, the reinvestment runway seems pretty limited compared to a Palo Alto or a CrowdStrike for Zscaler.
Mm-hmm.
And like some of the things they say don't make sense to me. Like they're saying we're going to eliminate firewalls completely, and I'm like, that's impossible. So
I don't think we need to.
Yeah, dig in. We don't need to.
Yeah, Palo Alto's. Sentinel-1, no.
I have a funny question that's somewhat under that broad umbrella of. All right, so bullish Robinhood because of the card, right? How does everybody feel about the term, quote, banking as a service?
Bass.
Banking has always been a service.
Isn't Robinhood just like at this point a levered crypto play?
Probably, but the context of
trading
of what like I came across, and I forgot who said it, was people were like, bullish Coastal Community Bank, by extension, bullish Coastal Finance Corp, because Bass.
I think the benefits they're paying on that card, the credit card, the gold one.
Yeah.
I think I was reading one, or someone's like, they probably can't, they're not making money on that. Like they can't possibly be making money on that.
No.
So the point is just to build the network out of people paying them their membership fees at this point.
Because you brought it up, now you invoked my rant on credit cards.
Well, every one of these companies says they're going to create a financial ecosystem, right? We keep hearing that. Sofi said it. All of them. They're all going to create an ecosystem where you get customers in the funnel, and then once you're in the funnel, you use every damn product, and you don't use products from any other company. And historically, people don't do that. So maybe someone will break the mold, I guess.
There is someone who will break the mold and create the ultimate financial community. It has crypto, stocks, point of sale systems, music, Cash App, music, buy now, pay later, has it all. It's right there in front of you. And that is Block, the company that is headed by our prophet and savior, Jack Dorsey. I, as your high priest, gather you all here today to bask in the glory of our financial saviors. And if you buy Block, you will be a millionaire tomorrow. Market's closed tomorrow, but ignore that part.
Day after
Anyway,
tomorrow.
No, just go with it. Go with it.
go with it anyways.
Block-
Blockheads unite. Welcome to the cult of the blockheads. The one and true fintech that does it all.
Yeah.
All
So
right, anyway.
Bass. silly term.
I had said Robinhood was interesting in December to
Yeah.
Jesse, and I'm
Yeah.
like, I thought it was interesting for another reason that not actually why it is, but it would have doubled by now. It's like
No, you know who said it was interesting in October? I was still in Dallas, or I think before October, in August. We had a whole voice discussion about Block and Hood.
Yep.
so why did you like it then? I don't remember this, but
Rates? Question mark.
Rates higher for longer, tons of cash.
the end.
Oh,
Okay. Oh yeah, the income from the cash they held. Right.
Yeah.
Okay.
That's
I was thinking they would get a lot of options activity from the Bitcoin ETFs and crypto fees, basically.
Oh, it's
So-
down 5% now, but it
Yeah.
breached 20 briefly. What's the other recent
Coinbase?
rumor? No,
No,
well,
no.
Coinbase I know is down too, but the Palantir, PLTR.
Oh, they're winning.
Oh, they're not down too much.
Okay. Yeah, because I don't know. Did it hit 25 not that long ago?
How is Palantir related to Hood though?
Retail darling that is winning. currently.
Oh, okay.
Yeah. So just
Did
look
you
at-
like Kathy Wood said that she could see that Palantir disrupt Microsoft? I sent that tweet out. So-
Well, she was sent by God to save retail investors in the funding world. Andrew's like, his
Did
smile.
I'm trying
He
to.
had to think about. You said God. He had to like.
No. I'm sorry. My smile was completely unrelated to that. I was trying to find the picture I sent you guys with the ExxonMobil versus Kathy Wood. Did I send it?
What?
Oh no! Oh no!
Okay,
ExxonMobil versus Kathy Wood.
Give me a sec. I'm gonna give me.
Oh,
give me.
no.
Keep talking.
you
and
have
I'll pull it.
okay. I'll keep talking. So, what I was going to say before about the credit card thing, I'm not talking about specific credit card products.
Yeah.
But generally speaking, yes, the rule of thumb is a 3% category is already somewhat of a money loser. For example, I lied. I'm going to talk about specific credit card. So the like a 5% rolling category for, did I say 3%? I meant 5%. The 5% rolling category for Chase cards. It's a rolling category and it's limited. They don't let you go bananas with it. They don't let you spend hundreds of thousands of dollars and get 5%. You do have limitation. I think the one card that I can think of that's 5% unlimited, for example, technically is the Charles Schwab Platinum card, where you can do 5% on it's crap. I can't do math right now. It's gonna be 5.5, I believe. Yeah, 5.5 percent cash back on travel, because you can redeem it for 1.1 points per, or 1.1 cents per point on Charles Schwab, and there's no limit on redemptions. So that's the only card that I can think of off the top of my head that gives that no limit on a greater than 5%. The Bank of America card gives you 5.25% cash back when you reach $100,000 or more with Bank of America, and that's capped at like $2,500 per quarter. So anyways, you don't make money on that stuff. They usually limit it. Giving 3% is aggressive.
My understanding also is Robinhood does not take any of the risk really from a credit perspective, whereas Coastal Community Bank does. And it's weird because I want to say that they're the same bank that did something with Walmart like a year or two ish or more, maybe 4 years ago, roughly. But anyways, XOM. Oil.
My gosh, this is so true. Thank you. I'm gonna retweet this. This is wonderful. I remember her saying this. The idiocy of it all. Oh my gosh.
Thanks to EVs.
Wow. Arc is now 40%.
Dan's like,
Oh, she's so bad. Like,
retail eats it up.
yeah, there's still so many people like there's so many YouTube channels. They will say that she's like dumb or something, but then like what actually they put on YouTube is exactly what she says.
No. You know who is
It's like they're like these fake Kathy Wood acolytes, basically.
You know who's the perfect example of this is all the SoFi investors because they shit on her. But then when she started buying SoFi, like, oh, Kathy's buying SoFi.
We love Kathy.
Kathy's, she's a well-known investor.
I should replay my Toyota video I made like a year ago because I'd be like, I was right. All you Tesla people, I called it like a year ago. What Toyota was doing. It kills me I didn't buy it, but
No, it kills me. I didn't buy oil during the weekly call episode where I said, "Oh, oil looks really good right here." This Guyana BS. I went through it for like 40 minutes.
Oil when it was negative over at Henry, I think it was Henry Hub. Yeah, that would have been a beautiful time to buy. Oh well, these things happen. Cocoa futures.
that's right. We're just gonna move on from oil, because of EV cars. It's not like oil's used in almost every product in your house. No.
You know what's funny is I actually drove my car. I had breakfast with some friends today, and he got a new car. So we drove very unfriendly to gas mileage, and I literally lost. I started with like 380 miles in the tank, and we didn't go that far. I ended the journey with like 260. I did not travel 100 miles.
Fabio, are you contributing to global warming?
I definitely did.
Well, he flew on his private jet to Aruba, so he's not helping.
Also, he smoked there like fire. That's
your carbon footprint is terrible.
Fabio's going to green energy hell.
I brought back some produce.
Greta's gonna pick at your house tomorrow.
Declared at customs. It was declared at customs, but I brought back some fine Dominican cigars. Dominican.
What is there anything else that because you already talked about credit cards? Did you want to talk about wine?
No.
Dear God, do not get me started.
No, can we not go down this path, please?
Well, we could indirectly kind of brush it by getting into like luxury retail companies.
LVMH.
And then somehow get into like Swatch Group. And then from there, Trojan Horse, some luxury watch brands.
Dan, help me. Dan, save me.
That's how we trick Andrew, where he doesn't notice. He goes like, "Oh, we're going to talk about Burberry." And then
Next
he's like,
thing,
from Burberry, we're going to talk about other companies.
Next thing we're talking about Hublots.
I accept you calling them that because it's Hublot, and who cares about them? But I accept you saying that.
Andrew Tate fans would not approve.
Oh, Watchdog.
These N, we have to be careful how we say it. We called it. We talked about it a little bit earlier, referring to it as the event.
Yeah, and I don't know. Has the market gotten faster? The whole sell and may go away. It's just sped up the timeline.
Yeah, like bring the stock market down. I will bring a force to bear. I have only one request.
Box
income.
If we talk about this,
squeeze.
Really quickly, let me find it.
You're gonna find something.
The market
because he's talking about Bitcoin. I got in an argument with someone over this.
Oh.
Oh.
In person? Question mark.
Yeah, they threatened each other.
Oh no.
I gotta hold on. I'm gonna put it.
Is it a former employee?
No.
Oh, okay. Someone that used to be employed.
No, it's a former live person.
I don't know why he would think none of us own.
What? You guys not hear what he said?
Hey,
no one hear that?
Desert's a big place. Hard to find those bodies in the holes.
Oh, you definitely heard it. Okay.
Yeah.
Okay. I was
but
I am partnered with Andrew. I have an incentive not to,
This was a summary, and we both get along really well. So
Wait,
I sent this to the other. I'm pulling up, yeah, but I sent this to the other individual because this was the conversation we had. So it was all in. We weren't actually. Am I sharing?
That's the background you go with? Question mark.
My background is just the auto Microsoft one. There we go.
Oh, okay. Anyways,
Microsoft changes it every, I don't know, day or two. So this is me.
Yeah.
This is the person I was talking to. So I was like, Bitcoin's not a store of value. It's just to legitimize it. BlackRock has an ETF. Having an ETF does not legitimize it. It's to prove it. This is that was more or less the argument. But
the happening, Andrew, the happening.
no, it's just like because I told them, I was like, in my opinion, Bitcoin's essentially in. You guys all know I'm not the biggest crypto bull. But in my opinion, Bitcoin's essentially just like levered NASDAQ. It's just like risk. It's risk on.
Yeah, that's what these.
All right, Michael Saylor.
See, Bitcoin is like the real estate of the future. If I told you you could buy the real estate of the future, why wouldn't you? I can't do his voice, but you know, that's his argument.
And it's like, well, if it's like it's really high pitch. Well, if you like, but he literally he said like we have a name for people that keep that store value in fiat currency. We call them poor. You haven't heard that?
No. That's wonderful.
Let me just walk up to some billionaires that don't own crypto and be like, "You're poor."
Let's see. But there's nothing I can find that's just that clip. Maybe it's. Let me see. We can share this while we're.
NFTs? Question mark.
Hold on.
Just gather value.
Well, the real estate developers in New York City, they're not buying the real estate because they want to live in it. They're buying the real estate because they expect
because they want to sell it eventually,
desirable.
Michael. I mean, let's be honest. Most of the people who are, yes, sure, some people pass it on to their children, but like most of the people who are buying assets at some point want to sell the assets at a profit.
Wait, pause. That woman doesn't know anything either.
People that use fiat currency as a store of value, there's a name for them. We call them poor.
But
No. He's arguing with someone who's like incompetent as well.
Oh, for sure.
She didn't corner him in the actual thing that people argue, which is the productive asset. It's not a productive asset because real estate and Bitcoin can't be compared in the same way at all.
No.
Like what is? I mean, I'm not bothered by him. I'm bothered by her.
Well, no, I wasn't bothered by it. I thought it was funny. But like the only way I would say there's an argument there is that if you're talking about what am I going to invest in, I like to invest in productive assets. But that's why part of the argument, the other individual and I got in, they were saying like, well, what about gold? And I was like, well, investing in gold's stupid. So why would I even argue this? So,
hey, I buy gold. I mean, I lost all my gold, but
okay.
You lost
it? Had gold. Yeah, I lost it all.
Yeah, in a boating incident, Andrew.
Yeah, it was really tragic.
I never understood. I don't get crypto. I don't even want to fight like against it with these people. Like, if you want to go buy it. Like,
that's what I tell them. Like, go buy. Like, I wouldn't be opposed to putting a trade on, especially if Bitcoin breaks through and holds above like 73. Maybe if you're like more of like in a trading account, but I wouldn't like as an investment hold it personally.
I mean, I know two people that every year they like put a specific amount of money in Bitcoin and they don't look at it. I was like, okay, they have the income to do that, and they want to. They don't want to miss out. So
that's fine.
That's good for them. Like,
it was fun to see the crypto market speed run through finance. Not gonna lie, from like a curiosity standpoint.
I just thought it was funny. They all assumed that Bitcoin was going to like triple, quadruple in value because of this halving event that came up. I'm like, if everyone assumes it's going to go up, what do you think is going to happen? Like, it's not going to do what you think.
I don't know because if you're right on this means my whole buy S&P 500 inclusion, sell S&P 500 disinclusion thesis would be wrong.
Oh, but that's a play like because companies are forced to, or when it's out of the S&P, right? There's forced sales. So,
but the whole thing with the halving is that basically the rate of supply increasing gets drastically reduced. So supply, like, it's a structural thing more than just like a thought process, or like a in my opinion, having is more of a structural thing that, like, even if you plan for it, it may or may not, I could be wrong, but may or may not, it can still happen. Versus like, oh, this company is going to report good earnings. Yeah, we already knew that. So like, it's not going to make a difference.
Bitcoin will do buybacks.
Dude.
I guess we'll see.
But so if that's true, I hold S&P 500, so I'll be very happy, because that means S&P 500 will probably be doing very well. So Fabio's,
Man, if you own MicroStrategy, like, I mean, if you bought it a year ago, good for you. But Michael Saylor's a crazy man for you to give your money to him. Look,
yeah, Bacon bought coal instead of Bitcoin.
Thanks, Tex.
although, so Costco is selling, I think, $200 million a month in gold right now.
Yeah,
Have you
it's
seen that?
because it's like at spot. It's like wild.
Yeah.
Holy, that's
Yeah.
just the volume of what they're selling. I'm like, wow.
The power of Costco.
They limit how much you can buy though. It's annoying. I mean, it would be if I was buying gold.
So where's your gold fob? Did
Ooh.
you put it in the basement like John Wick?
No,
It-
it's
Is it concreted into the floor?
no.
And
I
you got a hammer ready to break it if you need.
tragically lost it in a boating accident.
Oh,
Do you guys want to end the
All
night
of
on
it.
some fun?
It's really sad.
I saw a comment, made me think maybe we can end the night on some fun.
Okay.
So Dex is saying Bacon bought coal, or no, what did he say? Someone said Bacon followed Pabrai
thought,
into coal.
Yeah.
And we can look at the Wagon Fund's holdings. Have you guys looked at those recently?
I haven't, but isn't Microsoft in there of all things?
It's mostly like Turkish companies.
Oh yeah.
I think it's all international. I think last I looked.
Which I guess is fine. But
I mean, if I could free think Pabrai, I'd try and free think his mustache. That
Can I
is
just
an
say-
impressive mustache.
I really like their website though. I like this.
Wow, look at that nice house with the wagon. That's an Amish house, by the way.
It has lights, so I don't believe you.
They can
Ooh.
hire someone to turn on the light.
They're Amish. Not
Oh wait, no,
Jewish.
that's not
Wait.
how it works. Yep, that's not how it works. Never mind. They can use some electronics in their business, not in their home. Yeah.
Yeah.
So,
Let me
And
see if they have-
I've been out of coal because another value trap is intriguing.
Oh, this
Equally
was
ugly.
something.
I
That's
also
fine.
bullied Bacon a lot.
So I just want to say, if you're this presentation is like peak cope, because
Mhm.
if you're a fund and you underperform the S&P 500, what do you say?
Focus
Market's
on
rigged.
What?
long-term focus.
Its
Say the word
recent
long-
performance has been driven by huge gains in the so-called Fab Four. I don't know if anyone calls anything the Fab Four, but
I like it. Fab.
Yeah.
Wait, does he have Microsoft, Bacon?
I remember for sure that when Pabrai was on the rounds with podcasts, he was far more bullish Microsoft than other big tech.
oh, this was also a big red flag. His entire like thing on why you should invest in them was like Berkshire did really
Oh
good.
yeah.
Like we're the next Berkshire guys.
Yeah.
Like he doesn't talk anything about himself. It's like Berkshire. So like this is what they have. They have like the Turkish airport.
Mm-hmm.
I don't know this Alpha Metallurgical Resources. I think that one's done well.
In the
Probably
past,
coal.
I don't know his costs from when he bought.
Yeah.
That's the thing.
The Turkish Coca-Cola company is an interesting one because it trades on Turkey, but it's like it's operating like somewhere in the Balkans, like outside of Turkey. So it's not as currency risk.
AutoNation.
So this is the thing I find interesting about this is like a lot of these like Mongolian mining corp. Okay, I guess. So you read this. What do you think is like the thesis behind? Like when I read this, if I'm thinking, what's the thesis? Like what kind of, what's the goal of this fund? What kind of companies do they aim to invest in? What do you think their prospectus would say?
Mostly non-US and
It's
commodity-based businesses.
It's cheap.
So value based, right?
International value bias.
Yeah.
Yeah.
But
So-
still have the United States.
Yeah, because Console is a coal company.
So here's their key principles. It's like don't count. Okay, it doesn't matter. Don't pay. Don't overpay. Basically,
Yep.
focus on the great businesses with great people
Pause.
and long runways.
Pause. Great businesses. Great business. Okay.
Long runways. Wide moats. Proven ability to invest capital at high rates without accounting limits or much leverage.
Coal has a long runway, and it has a wide moat. Certain coal mined over here is different from the coal mined over there.
Like it's not even that I hate the portfolio that much. I just like read I read this and I was like, oh, it's gonna have like Microsoft, maybe some Amazon. I go in here, I'm like, oh, it's materials. Oh,
Yeah.
okay. Hey,
And a car dealership.
Hmm.
Don't forget the car dealership. And
But
I don't know what Group 1 automotive is, but probably a
here-
dealership.
aha, they sell EVs, so there is a long runway.
Of course they do. They have
I don't know what they do.
they're a dealership. They're legitimate a car dealership. They're
Mhm.
Bro, dude, look at
They have
this.
every brand you could think of, pretty much.
Dude.
But you know who just entered the dealership space not too long ago?
Amazon question mark?
Yeah.
Oh, they did?
Oh yeah, they have the dealership
Yep.
license. They started with Hyundai. I think they got. Did they get Mercedes?
Ooh.
Look at this moat. Wow. Massive. You know, one of my friends was offered to like it was still when they were in like incognito phase, so you weren't allowed to like talk to people about it, but he got offered the job to head up that division.
Who? Sorry.
One of my
For
friends
Amazon?
for Amazon, the car division.
Ooh.
Oh.
This was back in end of 21, maybe.
That's really cool.
Yeah.
Is there a way you can discuss without him providing you information that he can't provide? Just like a generalized deal.
He got offered the job. He didn't take it.
No.
I
would just like to know just the general like, yeah, I like it. That's all I would like to know. Just those words. No details, because I don't want to put someone in a position.
But even like, because I was trying to kind of just understand like, oh, like, what are they gonna do with it? And he even said like, I didn't accept the jobs. They wouldn't tell me a lot about it. Like they basically didn't tell him very much
Before getting the job. Obviously, when you would accept
yeah.
it.
Oh, for sure. But that's what I'm saying. Is like he wouldn't have anything.
Man.
Well,
But
anyways,
yeah.
All right. With that being said, we'll close it off here. We have a lot of people actually watching right now, about 200 across platforms. So these streams, they're growing. All right. With that being said, if you guys enjoyed the stream, whatever platform you're watching it on, like, subscribe, retweet, heart, whatever it is you guys like to do. And if you guys are curious about the club, you guys can check out the link down in the description below. As far as the next stream, we'll do another stream next week. With that being said, thank you guys so much for watching, and we will see you guys on the next one.
We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.